All right, everything looking good. We are live. Go ahead and get this stream started. If somebody could just let me know we are coming through loud and clear, we'll go ahead and progress as if we were. All right, so welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8 p.m. Eastern Standard Time on 7/31/2022. And obviously, as always, before we get started, this is not financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research and, of course, trade responsibly. Appreciate you, Geo Luke. Good to see you, man. Let's go ahead and get everything rolling here. So, obviously, we had a strong weekly close, monthly close, and pretty much saw the month play out exactly as we were expecting. We had a nice bullish bounce in stock markets, in crypto markets, pretty much in everything that we've been seeing weakness in, we saw strength in. And then, of course, the things we've been seeing strength in, which is very few, essentially like treasury yields, DXY, and energy as well. We saw some pullbacks on those. So now the question is, the same way that it was important to watch for that pivot, which is exactly what we saw for the, monthly, the quarterly, and the half. Now it's important to see, okay, so we saw a small pivot back to the upside after continual downside move. I mean, months of downside. So now are we going to see continuation to the upside this week? Or are we going to see weakness? And that was in fact just a reaction rally, a back test of our monthly, and then we're going to see continuation to the downside. Now, we don't know for sure. No one knows. Fundamentals or, just the current environment would tell us that we probably have more downside in store, as we've not even begun to see the long-term repercussions for like the Fed and central bank rate hikes. The tightening of money can, in many cases, take between 6 and 18 months to see the effects of these type of things. So that being said, we still have inflation. We still have rate hikes into the future planned, at least for now. So in my opinion, nothing has changed. Therefore, I would expect continuation of the trend. And, in most cases, as we'll see and as we have been seeing, the trend is obviously bearish or to the downside. Now, at any point in time, that could change. We're at areas in some of these markets where we could essentially be potentially threatening the bear market or threatening to move back into a bull market. Now, we saw essentially China and was kind of like the canary in the coal mine, showing us what that move could look like in case of a rejection. But we also know that there's still possibility China comes back down, puts in a lower high, and I'm just mean like Chinese stocks in general because they all essentially look the same. They come back down, put in a higher low rather, and then threaten the 200 again, possibly flip back into a bull run. And the same way that China led us into this bear market by a couple months and led us into the pandemic by a couple months, and in many cases has been a clear indication of what's to come, we could see whatever happens in China be again a clear indication of what's to come. So that being said, it's very, very important right now for us to pay attention to what's happening in China and then see how that reflects on the markets and see what the correlation is. Because if we find a leading indicator, in this case, the moves in China reflecting on what other markets are going to do, if we have that leading indicator and we can take advantage of it, that gives us a huge, huge edge on the market. Now, it's only going to work until it doesn't, and we don't know how long that's going to be, but it's a massive advantage. It's basically like playing poker with someone and they have a clear towel. Like, until they figure out that you know their towel, they're going to be in trouble because you'll be able to just take advantage of them. But once they figure it out, it's no longer valid anymore because they're going to stop doing it, or they might use it to take advantage of you, etc. So right now, people haven't really noticed that China has been essentially leading the markets. And it's been doing it for around 2 years now, and it's part of how we've been able to take advantage of it. So we're going to make sure to keep that on our scope right here. We're seeing a couple things basically that are threatening potential big moves if we flip the trend back bullish, or big moves if we see, trends flip or continuation bearish. So that being said, let's jump right in. We're going to take a look at a couple of member requests as well. If you're interested in using any of the indicators on the stream, they are available for free. Everything is listed down below. You can just search them on TradingView, add them to your charts. Also have like my main chart link shared on there and everything. Lots of free resources, tons and tons of videos, and showing how to use the indicators, essentially like teaching you how to do technical analysis. So take the time, put in the work, and it will pay dividends in the future. And if you are interested in a little something extra, the most recent Jewel Thief that we show on stream, and then obviously the Master as well, are group member exclusive. So for the people that have made a contribution, decided to join the group, I offer them some extra perks as well. So if you're interested in that, you can reach out to me. So, but that being said, enough of that. Let's get right into this technical analysis. Hopefully everybody's doing good today. Good to see you, Angel. Everybody else, feel free to say what's up in the chat. I do appreciate it. It's always good to see familiar faces. And by faces, I mean names. So TNX. So we saw a little bit of weakness here. We want to really take a look at the monthly and how that's developing as well, especially for some of these ones that are essentially giving us, again, like that canary in the coal mine effect. Because what we've seen throughout this entire bull run, or bear run, I should say, bear market, whatever, is we've seen strength in TNX. We've seen strength in the dollar, and then obviously we've seen strength in energy as of late, and then we've seen a reverse correlation with pretty much everything else. So we want to really pay attention to what they're telling us, because those charts starting to potentially top out or threaten some key levels of support or resistance could give us a much better idea as to if we're going to see continuation in these equity trends, or, you know, if we should be taking profits. And full disclosure, none of this financial advice, obviously. Any of the trade setups I show on stream are something that I might be interested in, or a hypothetical trade setup. And for the majority of the trade setups that I have displayed, I've either taken all profits or a lot of profits. So I have taken quite a bit off the table in the last couple weeks, as we essentially see all of our trade setups hitting their targets. I shouldn't say last couple weeks, maybe like last couple days, I should say, going into the weekend and then over the weekend. But obviously, you know where the take profit targets are, because, you know, we laid them out well in advance. So that being said, TNX right here, one thing that just jumps out at me that's worth note is this is really starting to look like a head and shoulders. It's not necessarily, I mean, I don't know. It's pretty clear to me. It looks pretty head and shoulders-y. Now, does that mean it has to break to the downside? No, sometimes they don't break to the downside, but it's definitely worth note. And then when we look at the longer time frames as well, we start to see that there's definitely some potential here for like at least some kind of correction. So again, it's not the most beautiful head and shoulders. It does not have to break down here, but we technically have closed a daily candle below what was our neckline. And we were watching, obviously, this blue support because it was the previous lows, and we had bounced above it. So once we take out that low, now we have a high, we have a low, we have a lower high, and then we have a lower low. And now we know the measure move breakdown for this. And again, it does not have to break down. It could easily break right back up and go bullish to the upside. But the measure move breakdown from this would be the distance from the head to the neckline. And then we take the measurement from the neckline breakdown. And that would essentially give us a retest of a 200 exponential on the daily, the 200 simple on the daily, and then some of our longer term Fibonacci's, which is the yellow line, as well as a back test of that descending resistance that we see on the macro when we look out over like that 40-year time horizon. So essentially, that measure move takes us back down to some key supports where we could potentially bounce. Now, we have a problem with this essentially because we know we're at 2.6 right now, and this is the 10-year Treasury yield. And we know the Fed funds effective rate is at 2.33 right now. So if we did get that measure move breakdown down to like 2.0, that would put our 10-year Treasury yield lower than the Fed funds like effective rate. I mean, it's possible, but that just is like, I mean, that's absolutely insane. Obviously, we've looked at the yield inversions and everything like that. And it's one thing to see like a 210 invert, or even like the 3-month and the 10-year invert or something like that. But it's pretty crazy to see the Fed funds rate, like, which is the overnight bank lending rate, invert with a 10-year Treasury or longer time frame than that. Does not mean it can't happen, but it's worth noting that while this looks pretty clear and it looks like we're going to break down from here and there's a lot of support below it, it's worth noting that there's also some fundamental things that might stop this from overcompensating or like overcorrecting. So we're obviously in a strong uptrend. 200 is above the 200 exponential is above the 200 simple. We're in the middle of a correction, which is the 821 bearishly crossed to the downside. So wherever we go down to, whatever support we find is going to be a buying opportunity, as we'll be buying support because we're still in a bull trend. And then when we look at the weekly, we see obviously how last week closed. We have a technical breakout over key resistances, which is basically, we came back up and we back tested the high from 2018. And now it looks like we're putting in at least a short term. And now when we look at the midterm time frame, we see a hard sell signal. We have left the bullish control zone. The Stochs are accelerating to the downside. We have a bunch of red histograms. We're still above the slope line, and it is blue, which typically this is right around the area we would get a bounce, somewhere around here. But the question is, are we going to get a breakdown first and a chunk of this measure move and then get a bounce and then continuation, which is likely what will happen? Or do we potentially get a bounce right here, consolidate a little bit, and then we break down? Either one is possible, but in both those situations, it looks like we're getting ready to put in this breakdown measure move, which is fine. That doesn't hurt the long-term case or anything, but it essentially, would be a daily and weekly potential top on yields. And again, that doesn't necessarily line up with the fundamentals, but when we're doing technical analysis and it lines up with the fundamentals, it's good because we have confluence. But when we're doing technical analysis and it doesn't line up with the fundamentals, that's fine. It's giving us a little bit of a mixed signal. We don't have that same confluence, so we don't necessarily have the same belief or trust or faith in that trade. And that's what we're all about here, is belief and trust and faith. No, but you know what I mean. The likelihood of it playing out, if we have a bunch of things all giving us the same case and pointing us in the same direction, there's a higher probability it goes in our favor, as opposed to if we have two opposing theories or issues, which in this case we sort of do. So that being said, I trust technicals, but we'll see what happens, because a lot of times technicals you'll be like, well, the fundamentals line up, there's no way the technicals are wrong, and then all of a sudden the technicals prove they're right, and then all of a sudden on the news it's oh, you'll never guess what happened, we're at war, and it's oh, that's crazy. It's somehow the technicals knew. Well, sure, of course they did, because before anything's public, it's discussed behind the scenes somewhere. And I mean, let's not no conspiracies here or anything, but let's not act like insider trading and insider knowledge and stuff is not a real thing. Obviously it is. So that being said, the weekly chart looking pretty bearish right here. Long term, still very, very bullish. The 200 is just now crossing the exponential above the 200 simple. The exponential is bright blue. The 200 simple is kind of oscillating between blue and pink. But we know obviously that as long as we're above it, which it's down here at 1.7, as long as we're above 1.7, eventually it will flip blue and we will be in a strong bull trend. So we're probably not going to retrace down that low, obviously. I mean, 1.7, 1.8 sounds crazy right now, but that's the key area, and this could take literally months to do that. We don't know. But again, it looks like it is ready to have a deeper retrace. I mean, we were threatening the 821. We broke down and closed below it for the first time. So it looks very likely that, we'll essentially either get a little more downside and then a back test. The same way on the monthly, we're essentially doing this on all our major indexes, cryptos, etc. The weekly chart looks like this. And the more times you look at charts and the more assets, the more you realize, oh, they just all do the same thing over and over again. And there's subtle differences. But once you see something play out thousands, tens of thousands, hundreds of thousands of times over and over again, you're like, oh, okay, hang on. So we don't know for sure what's going to happen, but there's a high probability based on, the other million charts you've looked at that maybe we get that back test now or something along those lines. So I would expect essentially the weekly, probably a little more downward pressure, probably a back test. And then, if we can't reclaim these levels, a breakdown. If we can reclaim these levels, continuation, it's all about how strong the trend is. And the truth is the trend has been bearish for a long time and it's only now flipping bullish. So typically what will happen now is the market will actually fight to push the price all the way back down here. And then when we get back down to those levels, then the market will decide, okay, now is there more buyers or more sellers? And typically when you start to flip over like this, you come back down, the higher you find support. If we just reverse right now, it's really bullish. If we come down halfway, it's still pretty bullish. If we come down to the moving averages, it's still bullish, but it's not crazy, crazy bullish. And if we break down back through them and then, don't go into a bull market, that's obviously bearish. So, and that's what China just did on our longer term time frame charts. Or no, actually the daily it was. We just had basically Baidu and Alibaba have various moves back up to try to start back into the bull trend. So now if we look at the monthly here, again, so macro, this is starting to be very, very bullish now that we have the 200 on top of the 200 exponential on top of the 200 simple, and they're essentially both blue right now, or we're well above them to where we essentially confirm they're blue. Unless we break down below 1.9 to 1.7, there's no threat of this trend not essentially being bullish and then continuing to the upside. When we break down below them, or if we break down below them, then we can start saying, okay, hang on, maybe we are going back into easing again. Maybe the Fed did get inflation under control. Maybe everything is gravy and we're just going to go back to easy money policy like we've had for the last 40 years. That is always a possibility. But, obviously that's not my base case. So that being said, and like always, we're just spending a little extra time on this because it is the beginning of a new month tomorrow. And obviously we're essentially at key pivot points for some of these markets that are worth paying attention to. Some big stuff happening here. I mean, if one way or another, we're essentially at the point where if the dollar and treasury yields top out right here, we could see the markets just absolutely roaring. But if they're just back testing before they go higher, again, we could see the markets go essentially to new lows. And if we go to new lows now, then we probably go much lower. So that being said, TNX on the monthly. So we're back testing the 200 exponential and simple. We broke above them and we're back testing them now as support. And we talked about this. Obviously, this is a rejection candle. Looks a little bit toppy right here on the monthly, but we broke above the 200 exponential and simple, and now we just closed back at the 200 simple. So from here, essentially, this next month, anything could happen. We could go lower and back test the 8, and then we could close right back where we started. We could go higher and, put in new highs, and then come right back to where we started. We don't really know what's going to happen over like the next month or so on this chart. But again, it's still inside the bullish control zone. The Stochs are still postured to the upside. The knife is starting to roll over, but we have all green histograms. We're above the zero line, and obviously we have blue slope line. So we're basically, with the exception of the 200 exponential and simple, still being technically like red or flat. We're arguably just starting the beginning of a strong bull trend, or we're topping out at the end of the bull trend and about to roll over and revisit the lows, or at least try to come down here and put in a higher low. So either one is possible right now, but this is the first long weakness that we've seen in the treasury since we got bullish on this thing, since we got bullish on yields, I should say, at like 0.68, the hard buy still in the bullish control zone. We had shorter term time frame bullish divergence. I mean, we've gone on a multi-year run. So it's not crazy to think the same way we had, 4 or 5 month retracement right here, we could be looking at something like that. Again, doesn't necessarily line up with the fundamentals, but it doesn't threaten the bull case of this whole thing. I mean, we've been in this trend for 40 years. It's not crazy to think we back test a little bit here. We have a little struggle for a couple months while the market decides, hey, are we going to call this a confirmed breakout? Are we going to wait for the Fed to hike rates again and then confirm the Fed funds rate breakout of that previous high? Because when we look at this on the monthly, sure, we did technically get a new high based on the wick right here, but we didn't actually close a monthly candle higher than the 2018 high. And, again, not to like nitpick, and like sometimes I know it probably seems like I'm being a little anal with my TA. You're like, oh, who cares? We put in a wick. But that's how the market kind of thinks. Because there's certain people that see that wick and go, oh, that's a new high. For sure, 100%. And then there's other people that say, well, it didn't close higher, so who cares about a wick if it didn't stick? Oh, see what we did there? But that's two different views that are both legitimate that people could have in these markets. So there's a good possibility the market could be split on that 50-50. And half the people are like, oh, it's technical breakout, new high. And the other half are like, well, not until we get a close above that. So, obviously we broke above the 200 exponential and simple. We broke above this with a wick, but we didn't close above it. So it's not crazy to think the market might want confirmation one way or the other. So confirmation bearish here would be if we start breaking down and closing below the 200 exponential and simple. Confirmation bullish would be if we do come up here and put in, a new high close at 175 or something like that. So the market still is kind of like wishy-washy a little bit, which is why we're actually going to look at something different today. I told you I presented a couple of charts in the group Discord, and just was talking about the Fed funds rate and everything. And I'm not going to go into like crazy detail here, but I did just want to kind of show this off and discuss what I've been talking about right here. It takes like 2 seconds to pull up this chart, and I've been talking about it, so I might as well actually like go through the work and show it to you guys here live. So here we have the Fed funds effective rate on the Fred data. Obviously, you can go look at this yourself. It's just the Federal Reserve's economic data that's, you know, publicly available, obviously. So sure, you don't believe the Fed, whatever. You do believe it, whatever. There's been changes over the last so many years, how they calculate data, whatever. It doesn't matter. This is the data that people look at when they look at data. We can argue as much as we want. We can calculate our own numbers. We can create websites and say, this is what it would really be if they didn't change the way that they calculate the cost of bacon and substitute ground beef for steak. Whatever, who cares? I mean, the actual people that we care about are looking at the same data as we are. So it's fun to look at that other stuff, and it's fun to say the actual effective inflation rate is 20%. But it doesn't help us any. So, you know, it's cool to know about that. It's cool to play around with it, but we'll just use the actual like Fed data. So that being said, we can see going back to like 1955, 54 right here, up to present day 2022. And this has already been updated with the most recent rate hike. So this is a perfect time to take a look at it. And then obviously the highlighted areas in the back here. You know what I'm going to do is... Might not be able to see that little corner at the bottom there, but it makes it just probably a little bit better. So anyway, it goes to present day, and this has like already been updated for the most recent rate hike. So we can see essentially we have the crazy peak everybody talks about, Paul Volcker, you know, killing inflation. We have like your whole 1980 peak up here at 22%. And this is the federal funds effective rate. So it reached 22% interest rates. And that's the Fed. So if we were like going to go to a bank and get a loan, you would pay more than that, etc., etc. So that was like craziest peak ever. And then we have a couple times actually where, and the recessions are like the gray areas. I don't know if I said that. You guys probably all know. But we see obviously most times going back 57, we have a peak right here and then cuts into the recession. Like once the recession starts, then we see the cuts start happening. Here we come up kind of peak, plateau, and then again confirm into a recession. And then the cuts start happening. And then again, we see a massive peak right here. And then we confirm into recession. The cuts are already taking place in the 70s. And then in 75, again, the cuts are happening. We're peaking as well. So there's like cuts, then there's peaks, then there's massive cuts, all while the recession's going on. Pure chaos, obviously. And then going into like 1980. And then again, afterwards, 1982. Again, we see like crazy spikes. And then overall, the majority of the time, I mean, if we look at this chart, you could say the majority of the time throughout this chart that we've been at essentially somewhere around 4%, which is essentially where my cursor's at right here, or 5%, or like around in that area is the meat of the time here. And then sometimes we've been crazy above it. We've had a few spikes above it. And then sometimes we've been at 0. But the majority of the time, you know, we're hanging around 4 or 5%, something like that. So it's not crazy to think that in real life, not with our like confirmation, like recency bias, that it's okay to have rates at like a real number, not just at 0. And that maybe all of this 0 rate easy money has inflated a massive bubble. And we know eventually the bubble has to like let some air out and then it can go bigger or it can pop. But either one is acceptable. It's fully okay for giant bubbles to let out a little bit of air and then get even bigger than they were to begin with before they pop. Or this could just be the end and we pop. But more likely than not, in my opinion, we're in this massive downtrend. It's more likely than not we continue in this trend. So easy money trend probably continues. We'll see though. We'll see. We're at the breaking point. So that being said, leading up until, this is the area we really want to pay attention to, was, well, we can look at both these actually. The majority of the time prior to that, we had spent our time in this like meaty session, and sometimes we had spikes above it and sometimes we had spikes below. But you know, we started seeing lows in like the 90s here, and then when we had the 2000.com bubble burst, the Fed started cutting rates ahead of time, and then we went into the recession. The Fed had already cut rates from like 7% almost right here down to like 5.6, and then we went into the recession and we came all the way down eventually in like 2004 to 1%. And then after that, we started climbing back up in 2004 and climbed up and then peaked again in 2007. So we had like 3 years roughly of rate hikes into that peak in 2007. And then again, they started cutting going into the recession. So they were cutting before the recession actually was like confirmed. And then we went to 0. Now, the most important part is that from that point, we stayed at zero from 2008 all the way until 2015. So we literally from 2008 to 2015 for 7 years had zero rates. I mean, if that doesn't distort the value of everything in existence, I don't know what does. Free money for 7 years straight. And then what happened? Powell essentially starts hiking rates, and we basically go into this hiking cycle from like 2015 to the peak in like 2019, essentially, when we reach 2.5% from zero. So 7 years of zero. And then it takes a few years to hike us up to 2.5%. And then we barely get to 2.5%, don't even quite get to 2.5%. And then we start to crater. The Fed essentially cuts rates that first time down to 1.5 and then just straight to zero. And then that's when we confirm it's a recession. And then again, obviously, cheap money for the next, 2 years. And then recent spike. Let me do... All right, so now here we're looking at the... So here's our 10-year time frame now. So obviously we know from what we were just looking at that basically 2008 was like the beginning of that just flatline period. And 2007, we were at 5.4 was our peak level. So if we look at this 10-year just a little bit closer, we essentially know we were in just this dead zone at zero forever. And then this is what the rate hikes look like from the Fed. We were basically at zero, and then they hike 25 basis points, and then they hike 25 basis points, and then just stair step up 25 basis points at a time. But the period of time after 7 years of zero, the period of time, we're going from December of 2015 to the peak up here is April of 2019. So we're talking about essentially like 4 years. So 4 years, and we got from zero to just under 2.5. And we did it after 7 years of easy money, and the market couldn't handle it. So now we've been, we were flat for 2 years again at zero. And now these, look at the difference in the acceleration of the rate hikes compared to now. I mean, this is like a stair step up, and the market couldn't handle that. I mean, this is literally just a rocket ship going straight up, 75 basis points at a time. And now that brings us to present, which is very, very important because now we're up here at 2.33%. And we're talking about how the bond market or the yields could be kind of confused because it's like, did we break out? We're technically above the 200s. We wicked a new high on the monthly. We didn't put in a new high with closes on the monthly. So I don't know. And there's just a lot of confusion. Well, the confusion is going to all be over very, very soon. Not this month, obviously, because we don't have a meeting in August. But next month, it's going to be over. Oh my gosh, I want this cursor going here. All right, well, anyway, it's annoying now. Next month, it's going to be all over. Obviously, August, we're off. And then into September, we have our next meeting. And we know the Fed's not going to cut. We know that. And they're probably not going to hike zero or not hike at all. Most likely, they're going to hike. The question is, are they going to hike 75 again? And then we'll have 3 75s in a row? Or are they going to hike but less, maybe a 50, which is a possibility. But the fact of the matter is, the probability of them not hiking at all is very, very low. And if they're going to hike 25 basis points. And if they hike 25 basis points, that is a confirmation of the breakout on the Fed funds rate. Because we're at 2.33% right now. Another 25 on top of that is 2.58%. So that takes us higher than our peak back here at 2.45%. So that being said, once we confirm a technical breakout right here, there's, in my opinion, going to be no question in anyone's mind. And all of a sudden, the futures market and the bond market is going to have to face reality, which is, look, the slogan forever has been don't fight the Fed. So why should we fight the Fed now? Why would we assume cuts are coming when, in fact, the rates are still continuing? So that being said, that's our Fed funds rate chart. It's not crazy either when we look at it in this sense right here. It's not crazy when we look at like the historical max of this chart to think that, hey, we're probably not going to indefinitely be at like 0 or 3%. there's probably a possibility or likelihood that at some point in time we're going to be higher again than 2.4%. Now there's an argument out there, obviously you've heard it a million times from people that, you know, people can't service their debt and blah 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 blah. Sure, that's definitely true. That is definitely true. But you know, we have inflation now, and the last time we had inflation was going into the 70s, and throughout that period of inflation, that was all of this going on, and the whole time the rates were going up. So, I mean, the same way this market essentially went up for the 50s to, you know, the late 80s, 30 years in an uptrend, and then from the late 80s, or, you know, mid 80s, whatever, early 80s, down to essentially 2015 at zero, somewhere around in this dead zone. You know, this was probably a 30-year uptrend, 40-year uptrend. This is, you know, a 30-year downtrend, 40-year downtrend. And now are we beginning now a 30-year uptrend in the yields? I mean, it's not that crazy to think. Everything happens in cycles. It's not crazy to think that we could be going into a like multi-year or even multi-decade long environment that we haven't seen in most of our lives, especially not in most of our investing lives. So that's my case for an open mind. You don't have to agree, you don't have to believe in it, but it's worth paying attention to, because if we do see something like that, well, we should start paying attention to what the stock market and other markets did during those time periods as well, throughout like the 70s, probably into the 80s, and see what the markets have looked like. So as a matter of fact, we're going to actually do that in a second too. So but we're going to look at oil first. U.S. oil, so nothing really has changed here. We basically got the move we've been expecting. Since the top right here, we've been expecting a consolidation, a lower high, and we obviously have a strong support right here. We went sideways long enough that support now is our 200 exponential and simple. That was obviously our target. So once we hit our target right here, we basically drew in these super technical, very, very high tech. I don't expect you to be able to replicate some type of situation like this. Possibly if you have a kindergartner with some crayons, you could maybe pull off something like this. But I mean, don't beat yourself up over it. I have, you know, years and years of experience. So that being said, we found some support right here. We mapped out a potential path that we could see. So what I would expect to happen in a situation like this, whether it is accumulation or distribution, we're looking at essentially the beginning or development of a pretty textbook looking Wyckoff. Now the real question is it going to be accumulation or distribution? Typically, you would see accumulation at the bottom of a trend. You would see distribution at the top of the trend. But sometimes when you're in the middle of a trend and the trend is getting ready to see continuation in that direction, you'll see what's called reaccumulation or redistribution. So you'll see distribution at the top, we'll have a leg down, and then we'll kind of go sideways, and then people aren't sure if it's accumulation or distribution. Well, when it breaks to the downside again, it's called redistribution, because essentially it was people spending time keeping price in a range while they sell off whatever the asset is, and then eventually the floor drops out, you know, below it, and then the same thing happens, and then eventually it happens enough times that instead of distribution taking place, accumulation takes place, and then it breaks out to the upside, and you know, you have essentially a trend shift. So that being said, we don't know what's going to happen right here, but what we're looking for is essentially the hypothetical situation where we either come back up here and put in another lower high, or break out and put in a new higher high, or we break down from key support right here. My base case is very, very bullish on oil long term, but also it has come a long way. It's definitely a little crowded. There's arguably some head and tailwinds, like fundamentally short and medium term, but we don't know really what's going to happen. We don't know how any of those things could change. So it looks like really what's going to happen now is we're probably going to get a little more upside here. We're probably going to come back up and threaten for like another lower high or something to that effect. But I don't think we should be surprised if we see a big break from support right here. I also don't think it would be surprising to see a new high and just continuation to the upside. But for now, this looks like a range to me, essentially. And when we're at the bottom of the range, we're basically buying support. And we're at the top of the range, we're basically selling resistance until we break in one direction or the other. So for me right now, I mean, oil looks like a buy off of support right here. It's still very bullish. The 200 exponential is still on top of the 200 simple. It's clearly in a bull market to the upside. So it's worth being cautious right here, especially if we've already locked in a lot of our gains, which we did through like the distribution period. But for right now, shorter term scalp or swing trade, it's not crazy to think that we could get a push back up here into like the teens, 115, 100 and something around there, 20 even. Just the thing to pay attention to is obviously breaking above that previous high or breaking below that key support, aka losing the 200 exponential and simple, etc. When we look at it on a longer time frame, oh, there was one other thing I wanted to talk about on the indicator oscillators. So when we look at essentially what's taking place right here, what we're looking for is divergence to develop on shorter time frames like a daily that could tell us that we're about to have a short-term reversal or at least a bounce from the levels we're at. So we have a low right here on this little swing. Then we have a lower low close right here on this little swing. Then we have a third lower low on this little swing. And when we look down here, we see obviously we have our lower lows, 3 in a row, and then we have a higher low. So now we're seeing basically bullish divergence developing. And typically, now it doesn't have to play out. It doesn't have to play out strong when it does play out, or it could be the absolute bottom and we go to new highs. We don't know how good the divergence is going to be, but we know typically that's one of our best indications that we're going to see at least a short-term reversal. And now if we have one drive of divergence like this is good. If we have another drive where we come down, put in another low, and then we put in a higher low in the indicator, and then we have multiple drives of bullish divergence, the power and strength of the move is likely to be better as more and more people notice it the more times it happens. The first time it happens, there's a little divergence. People are like, oh, hang on, something going on here. After the second, third, etc., people see it, or the longer the time frame it's on, it becomes more and more obvious to people. And then it's like, oh, wait, everybody sees the divergence now. Oh, there's multiple drives of divergence. We know this just can't keep going on like this. And then next thing you know, you get that big burst. Obviously, the 8 and 21 have been crossed to the downside. We're now threatening the 8, trying to back test the 21. So we're looking for the 821 to cross back to the upside, and then just a pushback up here to threaten the previous highs, or at least some sort of like internal high to low retracement, some kind of like key resistance levels here. But it does look like we're setting up for a decent little move here. You know, essentially from where we're at now, assuming we don't get a better entry than we're at right now, just coming up here and threatening the previous high, putting in a lower high, we could easily be talking about a 15 to 20% move. So that's what I'm looking out for here. And then obviously we see some short-term divergence. If we look at the stochastics here, we have our low right here on the blue stochastic, and then we have another low right here on the blue, and then we have a third low right here, and then we see that lines up actually with our series of lows right here on the stochastics line up with our series of lower lows. So each of these is a lower low, but we've been printing higher lows. So we'll see. It looks like we're probably, in my opinion, we're probably going to get another pushback up here, and then we probably put in another lower high, and then just chop around sideways, come back down to lows, blah, 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 etc. Now, while we have this horizontal support, even though we're bullish on the 200s, we're bullish on the ascending support and everything like that, part of what we really have to be careful of here, or at least, you know, pay attention to, respect, however you want to look at it, is that when we have a flat support like this, and we have descending resistance like this, lower highs, that's a bearish pattern. Whether you want to call it a descending triangle or you want to look at it as Wyckoff distribution potentially, etc., it is a bearish pattern. Because essentially what it is, there's a line in the sand right here, usually a massive order block on the books that's just saying, you know, there's so much buying right here. If the price gets to this level, there's just a ton of people waiting to buy that level. So every time the price gets down here, you know, it bounces a little bit and it fills some of those orders, fills some of those orders, fills some of those orders. But eventually what happens is that block gets deteriorated away. Each time we hit it, it gets a little weaker, a little weaker, a little weaker, a little weaker. And then eventually, we don't know if it's going to be after all this. We don't know if it's going to be right now. But eventually you break through that. Eventually it just can't take the strength anymore. So we have to look out for, you know, what looks like distribution. Even though we're in a bullish pattern or a bullish trend, we have a potentially bearish distribution pattern or Wyckoff topping pattern, etc. And then inside it looks like we're setting up for another bullish move here. So it's kind of like cross currents here, but it looks like we're setting up for a move higher here. And that's what I'm looking at, playing on a short-term basis. And then if we just go out to the weekly here, looking at the weekly, let me just turn off the drawing tools here. Looking at the weekly, we have cross 821 back to the downside. So again, this looks like we're going to get continuation to the downside. Now we did it right here, and then we immediately reversed it and moved back up. So it's not crazy to think that we're setting up for a push back up here. Now, we already back tested this level a couple times, but it's not crazy to think that we at least could get a wick or something back up here and another strong rejection where the market decides, okay, that's it. And it's also worth considering on the weekly, we did actually put in a higher high right here. But if we look at on the daily, this was the high, but it wasn't sticky based on that wick. So we see a hard sell signal. We see a bunch of red histograms. Red slope line is flipping. We're below the 8 and the 21. So while the trend is still looking very, very bullish on the weekly, again, it looks like we're setting up for some sort of back test as we confirm into the bull trend on the longer time frames. The market wants that confirmation. We want to come back down, retest it, and then we see when we get here, is everybody buyers now of support and then catapults us higher? Or is everybody, sellers of resistance, and then we break down and go into a bear market? You guys know, obviously, I'm bullish. I think we're bullish. But regardless, we can be extremely bullish on oil. I could tell you right now, hey, I think oil's going to $300 a barrel in the next 5 years. And you're like, that's fucking awesome. I'm going to just go all in on oil right now with leverage at $97. And, I'll triple my money. That's great investment. But the problem is that I'm very bullish on oil, but it's not crazy to think that from this level, we could essentially have a 15% back test, a 22% back test, even all the way to the 200 exponential or simple, as low as 35% back test. So if you get taken out of the trade because you either get scared or you get margin called because you're using leverage or, whatever, who cares if it goes to 300? If you lose 15, 20, 35% of your money in the meantime or completely get liquidated. So it's all about timing with these things. So here on the weekly, it looks like we're wanting to come down. On the daily, it looks like we want to have a little push up. So we'll have to see, obviously, which one both can play out. We can have a short-term push up, and that turns into a massive rejection, and then we get continuation to the downside. And then it's like, oh, both played out, and that makes perfect sense. And then again, still very, very bullish because a pushback down here to these levels, depending how deep we get, which I don't think it would get all the way back down, but that's the beginning of potentially, a multi-year or decade uptrend. And that could just be massive. I mean, who knows? Let's say hypothetically, it sounds crazy when people are like, oh, I could see oil at $1,000 a barrel. And you're like, well, you're stupid. That doesn't make any sense. Kathy Wood says it's going to $8 a barrel. Well, when you hear somebody say $1,000 a barrel, you think of today's dollars. You think of what you could buy today for $1,000. You could treat the whole family to a nice fast food dinner and, rent a movie for that price. No, I'm exaggerating, but you know what I mean. $1,000 is like, we know what it's valued at today. So when you look into the future and you talk about 10 years from now and you look at the way the central banks have been going and the acceleration of inflation and devaluation or devaluation of currency, etc., it's not crazy to think that the same way $100 right now buys you whatever, that could be the equivalence of what $1,000 buys you in the future. It's not crazy to think things could cost, 2 times or 5 times or 10 times more in the future. The longer time we go into the future, the more likely the prices are. And that's part of the plan. The plan is quote unquote 2% inflation, but maybe it's really 5 or maybe it's really 10 or who cares as long as it's not deflation. But when we think about these price targets and we look out into the future 5, 10, 25 years, they might seem crazy, but just keep in mind that's in dollar terms, not like real terms. Like real terms right now, there's a huge difference between what you can buy for $100 and $1,000. But if in the future $1,000 buys you what you can get for $100 now, the real value of that 1,000 is the equivalence of the 100, even though it's 10 times more in like currency terms. So hopefully that makes sense. With sometimes when you hear crazy targets that don't seem normal, like you're like, how could oil be $300 a barrel? That's crazy. Nobody will be able to afford to drive. Well, what if minimum wage is $50? And the average income is whatever, I don't even know, $150,000 a year. Well, then it's like, well, okay, it's not crazy to think that gas could cost $10 a gallon if everybody's getting paid, $50 an hour or maybe $20 a gallon. So it's all relative. So that being said, here's our monthly chart on U.S. oil. Just something to pay attention to or remember. So the monthly chart, very aggressive move to the upside, obviously. We have the 200 exponential is still below the 200 simple, but they're both angled to the upside and we're above them. So that is bullish, but we do have to be careful because typically when the 200 simple gets on top of the 200 exponential, it means the trend oftentimes is failing or getting ready to reverse to the downside. So it's not crazy to think that after losing everyone's money and billions of dollars, that one day Cathie Wood actually could be right and oil could go to $8 a barrel or something. But what year is that? You know, is that 2060 or something like that? Did we break back down below the 200 exponential and simple? This trend fails and then we break down and oil trends back towards zero? It's definitely possible. It seems more likely right now that we would probably come back down here, back test these areas. Eventually the 200 exponential crosses back to the upside. We take out the previous all-time high from 2008. We go to a new all-time high, and then way out into the future, like 2070 or 2090 or whatever, the year 3000, we're not using, you know, fossil fuels anymore because we've discovered something better, and it's so much better that we don't even need that shit. Even in like third world countries, they don't even need, you know, oil and coal and all that. Like, they've got the super Iron Man mini reactors, you know, everywhere. Everybody just has one because they're like, it's $20. It's like, oh, you don't have a reactor? They're $20, man. Here, just take mine. I got a couple. I mean, until something like that happens, we need fossil fuels. So the realistic possibility here is, you know, essentially we push back up here, put in a new all-time high, and then it rolls over, and the 200 simple was correct and was like cluing us in on this. Or the 200 exponential is going to cross back above here, and it's going to go to new all-time highs, and we're going to start, you know, what amounts to a massive bull trend. The last time we did something like that was back in 2001, and we were bullish until about 2015. And in that time, you know, from the back test, which this was the start of the bull trend, this is the back test, confirmation, and then continuation. That's the trends we want. This is our entry always. And the longer time frame, the better, because it means if we're right, it's going to last for, you know, in this case, obviously, from 2000 till 2015. So what's better than 15 years in a trade, you know, that goes parabolic? And the beauty is here, if we're buying support down here at the 200 exponential or simple, or we're buying the 821 cross, you make one trade right here. You enter, and then, you know, you get out, obviously, somewhere around this nasty capitulation. Obviously, you're going to be trading on probably a shorter time frame, and it's going to be looking nasty up in through here. But, you know, even if worst case scenario, you get out right here, 175%, and you're in the trade for 8 years. Or maybe you get out a little sooner and you're up 300% and you're in the trade for 8 years. But it's one time in, one time out in an 8-year period. I mean, that's pretty nice for, you know, a few 100%. So it's easy to take these longer term moves and take advantage of them. And essentially that's what we're looking at now. We're basically looking at coming back down here, again, possibly as low as like the 60s, the 70s, most likely the 80s. And we come back down and back test somewhere around this area, the 200 exponential starts catching back up here. And then actually what happens is, you know, we buy support right here and then go into this massive uptrend. So that's what we're looking forward to. And that's what I think is likely to happen. That's my base case on oil. You guys obviously know that. We essentially are putting in some various different like bottoming type patterns. We're threatening a long-term breakout and threatening the all-time highs. So like my base case on oil is essentially a back test, consolidation, and then much higher. But we'll see how that amounts to. I mean, the 1.236 from the previous all-time high is $275. It's not crazy to think that after we break out from here that we could go to $275, and then the 1.618 is $763. So you're like, well, see, that doesn't make any sense. Oil's never going to cost $763. To which I say, please rewind the stream 5 minutes and listen to what I was just saying about it's not crazy in the future to think $1,000 buys you $100 worth of shit. So a $100 barrel of oil right now might be the equivalent of a $1,000 barrel of oil in the future. It's not crazy to think. You know, if the governments keep it up, keep fucking off. So yeah, that's it for oil. And again, we have to be very careful right now with what we're seeing. You know, these are our key charts we're looking at, which is 10-year Fed funds rate, U.S. oil, and we're actually going to skip out of place for a minute here, and we're going to look at the DXY. Because again, I want to really just focus in and pay attention to the potential that we could see these trends that have been going on now for, you know, months or years, either potentially like completely ending and reversing, or at least having some short-term pullbacks. So here we have, and there was some divergence too that I forgot to mention on some of those other charts. So go pay attention to that on your own. That's your homework. Find the divergence I forgot to talk about so I don't have to go back and look at it. So DXY right now on the daily, obviously we had some topping signs right here. The 8 and 21 are crossing to the downside. We're closing below those levels. We lost this key support at 106, which was also the 21 moving average. We back tested the previous high. We have another high slightly lower than that. We're down here. We obviously got the hard sell signal, and then we were consolidating at flat support. Almost always breaks the downside. Bunch of red histograms, red slope line. We're at the 0 line. We're in the bearish control zone. It's not crazy to think that we're going to see some further downside pressure. Now, we don't want to get bearish on the dollar because at any point in time, we could barely shoot back up to the upside, and there's not a lot of gas left in the tank right here. We're in the bearish control zone, and we went nowhere. The last time we were at this level, if we look back essentially down here, the dollar was at 102. Now it's at 105. So we'll see what happens. It looks like we're going to get some downside pressure. We're still very bullish on this. And it is crazy, but possible that we come down as low as 100 again. But that being said, if we flip out to our longer time frames, the weekly, what is it really? It's a back test of the 8. So if we break down from here, we likely back test 104 or even the 21 at 103, somewhere around there. But this is very, very bullish. The 200 exponential is just now crossing above the 200 simple. Again, we know it's not crazy for a back test all the way back down to that level. Now we're looking at the weekly chart again. So this could be a back test that lasts for years. And we could literally drop down here to, 95, and it could take a whole year to get down there, and the dollar could be weakening. And at that point in time, everybody would see the dollar is topping, it's over, it's done, the trend's done, blah, blah, blah. And that would be right, again, short term. But it doesn't take like the macro thesis and say, oh, the dollar's done now, it's gone forever. Realistically, what it looks like is going to happen on a weekly. It looks like we're going to spend a couple months coming back down here, and then it looks like we're probably going to go into a macro bull trend that lasts for like literally years or decades. So again, this looking a little toppy, still very bullish. No reason to think all of a sudden that we're going to lose this trend. And it's actually the beginning of a macro massive bull trend. So that being said, still very, very bullish on the dollar. The daily looks a little toppy. The weekly, we'll see how deep it goes. We really got to watch the daily. And then the monthly, I know people are calling this a big rejection candle, and it is a rejection candle. There's a big wick rejection to the upside. Obviously, people taking profits at key levels makes perfect sense. The candle is still green. The trend is still strong. I'm not going to call this a topping candle, but it's worth paying attention to. Oftentimes, too, we'll see like a blow off top like that. The price will march back up to it, and then it'll start to roll over, similar to like what oil did. So we'll watch it on different time frames. Here on the monthly DXY, though, again, 200 exponential above the 200 simple. Both have a positive slope. We have back tested the cross. We back tested the cross right here again and didn't come down to the 200 simple the second time. So in my opinion, this thing is like off to the races. So when we come back down for our next bottom on the dollar, our next pullback on the dollar, which again, I'm not convinced it's going to happen right away. But when we do get a deep pullback, most likely we're going to be pulling back to like 102 to backtest this previous high, or somewhere around like 98. 100 would be a very, very strong support. So likely we come back down, backtest that. I don't think the last time we got to 200 simple, time before or after that, we got to 200 exponential. This time, I don't even think we get there. This is the most bullish the chart can be without literally putting in all-time highs right now. In the bullish control zone, still very strong, kind of leveling out, but it's got to cool off after the move it's had. A bunch of green histograms, blue slope line, very, very, very bullish. And again, obviously, you guys know this was our target for a long time, so it's not crazy to think we're extremely bullish on something for 2 years. It goes on a massive bull run, hits our targets, doesn't change our long-term view, our base case, but short-term, now is not necessarily the time to be bullish on the dollar. So we see yields, we see the dollar, or DXY in this case, we see what's happening with the Fed funds rate, and what we're going to get guaranteed one way or the other a month and a half from now. Or even if they don't hike at all and they say we're just going to chill for this month till our next meeting, that gives us information as well. I don't think that's likely to happen. I think we get at least 50 basis points at the next meeting, and then that's going to give us a technical breakout. And at that point in time, the bond market can't fight the Fed anymore and has to just admit defeat, basically. At least short term anyway. So that's the dollar DXY. Let's get back over here. And it's worth note too, actually. I'll pull it up one of these days and we'll look at it. If you look at the factors that are making the dollar strong, it's all relative to what's in the basket of currencies. And a lot of it has to do with the tightening cycle. But if you actually look at the individual like dollar compared to the components, look at it compared to the euro, look at it compared to the pound, the Canadian dollar, Japanese. You look at all these things and you'll see actually that the Canadian dollar actually looks pretty good and the chart looks completely different compared to the US dollar, but all the other ones look horrible. So the Canadian dollar actually is fairly strong still, which again falls back to my long-term view that there's a definite possibility that we're going into essentially like an east-west kind of split in the world, and that we're actually going to be like sort of trading in those little splits. And then on top of that, Canada is like extremely rich on natural resources, obviously, and they're our neighbors to the north. So, and they're also tightening, respectively, as opposed to countries like Japan that are doing nothing. So in all reality, it's not crazy to think that while the DXY looks bad, that actually, and obviously we use the DXY as a metric or barometer as to whether or not we should be investing in foreign countries, companies, whatever. So if the dollar is strengthening compared to the basket of currencies, we want to be investing in stuff that's denominated in dollars. Otherwise, even if we invest in the Japanese stock market, it goes up 20%, but then in the meantime, the yen loses 20% of its value compared to the dollar. We went up 20%, we lost 20% because of the currency, and then we break even. So we're not going to invest in a bullish trend in something that's denomination compared to the dollar is bearish. So Canada actually has some serious possibilities for the future here. So definitely worth paying attention to. And then also, that brings us back to some of the potential opportunities in pot stocks and some of these other things as well. So, obviously natural resources, mining, oil, energy, all that different stuff as well. So, and maybe that also some of the Mexican opportunities as well. We've got a lot of potential there. Now, currency-wise, we don't see the same thing, but it still at least comes along, with that same sort of idea that we might see like an east and west split. So it's worth paying attention to. I think Canada is probably the biggest area right now that's being overlooked based on its strength relative to the dollar. Because everybody's like, oh, everything's going to shit compared to the dollar. It's all garbage. The dollar's the cleanest underwear in the laundry. But actually, Canadian dollar looks pretty good. So it's worth paying attention to. Actually, we're going to go back and just rip through the indexes, and then, we'll make our way. But yeah, Canada. So definitely on the radar. I'm going to be looking at a few things there and presenting some trade setups and opportunities for longer term investments as well in the streams to come. So Dow Jones. So we're really going to focus here on our longer term time frames. Because obviously we just had our monthly close and this is very important. But the most important thing to pay attention to on the Dow daily is we are just back testing. We're very near the 200 exponential, still below the 200 simple. It's not crazy to think that we get up to that 34,000 level and I get my targets and then we reverse to the downside. It's also not crazy to think that if we do get back above those levels, that they start flipping back blue and the bear market's over and we're going bullish again. Now, that's not my base case. I don't think that's going to happen. I think it's very, very unlikely, but it is a possibility. And if we get up there and start confirming and it starts looking good, we have to respect the charts. So that being said, the daily up in the bullish control zone, bunch of green histograms, blue slope line, back testing the 200 exponential and simple, 821 across the upside. The move is almost done. We've been expecting this move. We've been planning for this move. We nailed the bottom perfectly. We back tested the 236, break out of the 236, gives us a measure move to the upside. Measure move to the upside takes us to a potential lower high right here and a back test of the 200 exponential and simple. Also the descending broadening wedge. Tons and tons of confluence around this level. If we would have got up here, a while ago on that push, we would have got up likely around to this level. Since we're getting up here now and it's been kind of lagged out, this is obviously, just to adjust for time, this is obviously the area we're paying attention to, which is, again, the descending broadening wedge, the 200 exponential, the 200 simple, all those areas. Now, again, if we top out at this level, bounce off it, come back down, put in a higher low again, we got to respect the possibility that we come down to the 236 and then we actually have an inverted head and shoulders. And then really we break out of the descending broadening wedge, retest the all-time highs, and it's off to the races. Possibility. Again, not my base case, but that's how we could potentially see these charts develop. and what it would look like. And then obviously we have indications along the way that tell us, oh, hang on, confirmation or invalidation, etc. So when we look at the weekly chart, we bounced the 200 exponential, didn't quite make it to the 200 simple, but we got a perfect bounce off of it, back testing the 8 and 21. This is a key right here. On the weekly chart, we were back testing what was support right here at that 33,000 level, back testing it as resistance. And again, it's worth noting that we have a high, a low, a lower high, a lower low, a lower high, a lower low, and now we're coming up here. So what we're paying attention to is if this prints a lower high and breaks back down and fails to cross 821 to the upside, it's going to look very, very bearish. If we come up here and start consolidating up here and then break through this and take out this lower high, it's going to look pretty damn bullish. But it's worth noting that really maybe we just have a high, then a low, then a lower high, then a lower low, and this is just part of the same move. And then this would just be another lower high if it doesn't get above 34,820. So it's worth paying attention to and noting that the key levels we're looking for are if we take out this high, if we take out this high, and then, obviously the all-time high as well. So we'll pay attention to that if and when we should get there. That's obviously the bottom of the resistance level based on the daily that we were just looking at. So very, very big area of interest. Also longer term time frames. That purple line goes back on the Dow Jones. We'll look at it on the monthly here, but just pay attention to this purple line. We broke above it right here after consolidating at a couple times, and then we just broke out above the red line right here, and then we actually break down. We find support at the purple line. We back test the red line. We break down to the key fib. We back test the purple line, and then we break down to the previous all-time high, the 200 exponentials and simple. And now here we are back testing the 236 and that previous high, possibly even that purple line. And now you're like, what are all these lines? I can't keep track of all this shit. Well, let's zoom out here and go to the monthly, and then we'll look at that for just a second, and we can see how important they are and how perfectly we have touched them, considering that they go back. The purple line started in the 1930s, was the initial peak that we're using, and the next peak we use is in 1999. So it goes back to the 1930s. Our last touch was in 1999, and then we have a couple touches in here, and we saw how we went above it, back tested it, etc. So it's worth noting how important that level is, and that if we did top out right there, that the next level back down would be a retest of our yellow line, which is essentially the heart line of this channel. So when we're in the bottom of the channel, between the blue and the yellow, we go from basically the bottom to the top to the bottom, eventually to the top, and then back to the bottom eventually, and then we break through once we get through the top, and now we go to the purple, and then back to the yellow, and then up to the purple, and then we break through the purple. So is it crazy to think at some point in time we make our way down to the yellow? Now, it doesn't have to be right now. Maybe we don't go down to the yellow. Maybe we just go sideways so long in this range that eventually we run into the yellow. So maybe I'm wrong and we don't have a deep retrace. Maybe we just go sideways until February 2033, and then we just tag this, and the whole time we just range right here, and it's just boring and it sucks and nothing happens for the next decade, and then we finally touch support and then we bounce off of it. That's a possibility. We did something like that back here in 99. In 99 we topped out, and then we go down here, don't quite get to the yellow line, we actually come up and put in a new high, and then we go lower and we get back down to that heart line. So we'll see what happens when we get somewhere around here. We're looking at key fib levels. We're looking at monthly moving averages. We're looking at these crazy long-term time frame areas. We want to pay attention to also, just while we're here, we were talking about it earlier, that area from essentially the late 60s into the early to mid 80s. So let's take a look at that area right here. So I have in this resistance right here that acted as resistance for a long period of time. So this was our run up into 65 where we topped. And then we have a retrace back in 66, and then we top it again in 69. And then this is our 70s. We're basically bouncing off the 200 exponential and simple right here. That's 1970. We have our run up into 72. And then this is that massive crazy inflation fight going on right now. So while the rates are going up to 20%, in 70, the late 70s into the early 80s, the stock market's actually not doing that bad. It's just going sideways. Now, that's not the whole market, but it's the Dow Jones. The best stocks actually don't suffer that bad. Now, I say that because we're looking at this in the broad sense of things, but in all reality, they went down 43% from that initial peak over like a 10-year period. Yeah, over a 10-year period. So which is worse? Your stock's just going sideways for 10 years? Your stock's losing 43%? They both really suck. But if you don't sell and you just hold for 10 years, either way you're okay, unless 10 years sideways and 43% down is enough to shake you out. But obviously we look at this, weren't born yet, so we couldn't trade it obviously. But we look at this and what do we see? Well, it looks like a topping pattern, right? Because we're just hitting this. But again, let's pay attention to this. We have a flat resistance. The same way in oil, we were talking about a flat support. When you have a flat line in the sand like that, the more times you tap it, the more likely it is to break. So that gives us a slight bias. The more times we kept bumping into that area, it gives us a slight bias that eventually it's going to break. Also looks like an inverted head and shoulders pattern right here. Also off of 200 exponential and simple support. Lots of things. And then obviously the bottom of the channel as well eventually. We literally nail it like almost to the penny. So there's a lot of stuff here telling us actually we should be really bullish right here. The problem is, and people seem to forget that everybody talks about the 70s and the 80s and how this is like the 80s, but nobody's talking about how the stock market went sideways for 20 years from 60s to the 80s. So, I'm not saying it has to happen, but we don't need to have a deep retrace. We don't need to have, a time capitulation, but we could get both. So it's worth paying attention to, hey, we could go down 40% total from the top, and we could go sideways for 20 years. And we could actually, one time put in a higher high and then go to the lower low. So there's a lot of situations that people don't pay attention to, and a lot of people want to compare right now to the 70s or the 80s, or say this is the Volcker moment, or once they fight inflation, everything will be back to normal, blah, blah, blah. Inflation was basically raging throughout this whole time, and they were basically like fighting it and then losing the fight and then fighting it and losing the fight, and it was just back and forth fighting, and then finally, they completely destroyed inflation eventually. And then after that, the rates started coming down from that 20 level. And then the rates coming down is what caused, we looked at that massive period of time. This was our peak right here in 1980. And then we had that other crazy peak in, March and December of 1980. We had those two crazy peaks. And from those crazy peaks, 1980 on, the rates have been literally just melting down to basically nothing. I mean, this is a dead heartbeat. If you were investing in this, whatever chart it is, you basically lost all your money, and there's no hope of ever getting back to new all-time highs until you put in a higher high from one of these previous lower highs. So that's the initial sign that we may be breaking back to the upside. So that being said, this period of time right here is what we're looking at on the chart, from the 60s right here to the 80s. So we see the rates were going up for 20 years while the stock market just went sideways. And it wasn't until the rates started coming down that the stock market was ever able to have that next big breakout. And when we look at that in perspective, this was that whole period we were talking about when the rates are going crazy and they're fighting inflation. And then this is what happened after the rate cuts began. So this is what 30-something years of easy money did to the stock market. So if we're in that moment now where we could potentially be transitioning into a bull market on yields, or at least some sort of deep retracement, aka a spike in yields, it's not crazy to think that we could see a big give back, a deep dip back to the heart line, 40+% correction, or we could see a long 10, 20-year consolidation pattern where we basically just chop around in range at these levels. We don't need a deep correction. We don't need a time correction, but we could get both. So it's definitely just worth paying attention to, because nobody mentions that the stock market went sideways for 20 years and down by 40% during the inflation fight. And nobody mentions that the reason that we were able to get this massive rally, keep in mind, this was $1,000 Dow Jones right here. And now we're at over, 36,000 we made it up to, I think was the peak, somewhere around there. So, 3,600% in that period of time. And God forbid, we have too deep of a retrace or don't put in a new all-time high after like a few months. I mean, is it that crazy to think we get like a respectable time or price retracement? I don't think so. Especially not if we're fighting inflation and we don't have the easy money. That was the only thing that propelled the stock market to these levels. So that being said, that's the end of it. Dow Jones today. Just wanted to really take a deep look in that. I will be doing a how to draw this chart, little like walkthrough if you're interested in having that for yourself. Obviously very good to have the Dow Jones and the SPY charts or some version of them, as they are like really a great way to like gauge the strength of the overall market, economy, etc. So on the monthly right here, what happened? We got exactly what we said. We broke down from here. We 100% called this candle perfectly, a back test exactly to the 8 and 21. So from here right now, this is it. We're going to war, okay? I don't care if you're a bull or a bear. It's wartime, okay? So you could be neutral if you want and sit on the sidelines and watch, and that's completely fine. But if you're a bull, now's the time. You should be a buyer right now. You should be going all in with leverage, to the moon. And if you're a bear, you should be shorting the shit out of resistance and saying, oh, this is it. The bulls are dead. We're about to skin them, scalp them, and wear their hides to keep us warm in the winter that's coming. Something to that effect, or varying degrees, depending on, how extreme you are. But that being said, this is it. We're fighting right now. We've been in a downtrend after a long uptrend. We're correcting. The real question is, are we done correcting and we're going to go back in the uptrend, or is it only just begun and we're going much lower? We don't know the answer for sure. We know that the momentum long term is in favor of the bulls, but we know short term it's in favor of the bears. Hard sell, left the bullish control zone, very close to confirming an 821 across the downside. Bunch of red histograms, red slope line. We're below the slope. It looks like we're going lower. And obviously the key level to watch on the Dow, because we haven't gotten there yet, would be that 28,575 previous high. And then also we're looking for the 382. We didn't quite get to that target. We didn't quite get to the 382. We were very close to both of them, but somewhere around, basically between 29.5 and as low as 28,250 is our next step down. And again, we'd be coming from 33,000 or somewhere around there. We could very easily get another little push up right here, and then it rolls over. We don't violate any of our existing patterns, resistance, support, anything. We're basically just, push up a little higher, come back down, new lows, hit another key level, and then slinky theory just keeps on keeping on. So SPY, again, same thing, backtesting the 200 exponential and simple, backtesting the previous high, backtesting the previous support right here. We bounce off of our descending wedge. We broke out of the top resistance of it, and that's starting to give us our measure move to the upside. Obviously, we have the heart line here. We broke through the 236. Again, if we would have got there on this push up, our target would have been slightly higher for the backtest of the 200 exponential and simple, but now it's over here. It's that previous high. It's the 200 exponential. It's a 200 simple. It's the previous support low right here, and then it's also the descending resistance right here. So this is basically somewhere around here is where we're looking for a top. So again, the move has already played out. In my opinion, not the time to get bullish. I don't want to be a buyer into all this resistance. All this shit right here is going to be... So anybody that's using this line is going to be a seller. Anybody that's using the 200 simple is a seller. Anybody using the 200 exponential is a seller. Anybody expecting us to fail to get another higher high is a seller. I mean, there's the heart line, potentially a seller. There's a lot of reasons a lot of people could be looking at the same area and saying, I'm a seller here. The same way there was a lot of reasons for people to be looking to be a buyer down off these key levels, like off the weekly 200 exponential, simple, etc. So still bullish for now for a little bit more continuation, but definitely looking a little toppy. I think we're going to get some serious volatility and turbulence this month. So let's turn off our drawing tools. Obviously, the key areas to watch out for are the 382 at 354 and the previous high at 339. Also lines up, with the 200 simple if we go slightly lower, and then also the bottom of the channel as well. We obviously have just gotten our bounce right here. Likely, what is it? Probably just a dead cat bounce. How do we know things are changing? If we start confirming back to the upside. Hard buy signal, bunch of green histograms. So this is either a horrible fake out, definitely a possibility, my base case, or we're about to start going back into a bull trend and threatening the highs. And we just saw that either one of those is viable based on what happened in the 60s to 80s We could easily go to a new all-time high. Everybody would be extremely, extremely bullish, and it's game on again. And then after that, 50% down and another, decade sideways plus. So SPY on the monthly, we have a pretty aggressive knife stab here to the downside. It's worth note. Now, it doesn't mean that's going to be like the bottom or anything, but the previous pretty big knife stabs, again, were our bottoms. So it's worth paying attention to. We didn't cross down this 821 since back in 2010. So since 2010, we haven't had a red cross or a bear cross. So again, this was our base case, was just a back test of the 8 and 21, and now it's war. We don't know. You ask me right now and you say, hey, which one is it going to be? Are we going to break down or are we going to go to upside? And I will say I'm bearish because we have a bull trend, obviously, but we're clearly in a shorter term correction. Hard sell, bearish control zone, Stokes accelerating to the downside, all red histograms, red slope line. We're below the slope line, very close to 821 cross the downside. I'm bearish and I think we continue to the downside. But I'm telling you the God honest truth right now. If we're going to be wrong, if I'm going to be wrong, this is the best place to be wrong because it's literally a pivot point. We have a bunch of support right at this area, a bunch of resistance right at this area. And how are we going to know we're wrong? Well, if we close back above the 8 and 21 and start consolidating, I'm wrong. And I admit it. And then I'm bullish again. And if we break down from here and we close back below it and we get the 821 cross, I'm right. And I stay bearish. And it turns out I was right that shorting resistance was the best decision you could have possibly made, not buying resistance. So we'll see what happens. I will gladly be wrong. I will gladly be right. But if we're right or wrong from, a market pivot or a key swing like this, that's the best place to do it because you're wrong almost right away and it doesn't cost you much. So the real way that the risk and reward benefits us and how we're able to use that as such a valuable tool in our arsenal is by keeping our risk as low as possible in relation to our reward. So regardless of the size of the reward, the smaller the risk, the better, as long as it's not costing us, getting wicked out of trades or getting chopped out of trades and then they go in our favor, but we already got taken out. So the idea is to basically minimize your risk with the best amount of reward. And the easiest way to do that is from a pivot point because we have to risk the least amount to find out if we're right or if we're wrong. So this is very, very important right now. So again, sticking to my guns on this one, I still think we go lower. We could go a little bit higher first, but I do think we continue lower. And then we'll see what happens from there. But we have clear areas where we could be wrong from. We have clear targets to downside. We've hit most of our targets to upside, but we'll reevaluate if we do start seeing more strength. And then obviously we have this key channel right here that we've been operating inside since 2009, since our last 821 bear cross. So we've basically just been going sideways inside this thing, respecting the top and bottom of the channel, over the last decade plus. So again, it's not crazy to think at some point in time that we do make it down to the bottom of the channel. We do make it down to the pre-Rona dump. We do make it down to the 382 and some of these longer term targets. So that's what I'm paying attention to. We can obviously reevaluate on longer time frames, but worth paying attention to how our daily, weekly, and monthly closed. So IXIC, these are all looking the same. Back testing resistance. Did take out that previous swing right here. Worth noting that this is really the swing high and that's the low. And this is probably just an interswing move. So not that important. But it looks like we're headed up here to 200 exponential and simple. Back test some of these resistances, etc. But we do want to be careful of that monthly. We already had the cross take place. Again, the last time the cross took place was in 2008. So we've already confirmed the bear cross that was the GFC. All red histograms, red slope line, hard sell, left the bearish bullish control zone. Pretty aggressive knife stab down here. Again, those were our short-term, bottoms before going higher. So we don't want to get overly bearish. We don't want to get overly bullish, but we're clearly at a very, very important pivot point. I mean, if we get rejected here, this is going to look disgusting. And, we're looking at a quick, probably 25% haircut. But if we confirm back on top of the 821 and invert this cross or cross it back to upside above 13,000, we're probably at new all-time highs in the next few months. And then finally, the Russell for our major indexes on the daily. Same thing, just back testing these key areas. We have slightly higher targets for 200 exponential and simple. This has been an underperformer, so Wouldn't be surprised to see more underperformance. Did reclaim the 200 exponential and simple, which is good. We do have a buy sell buy on the weekly, a bunch of green histograms. So is the Russell ready to have another push up here? Is it time to get aggressive? Probably not, but it probably does have a push up here. And then on the monthly, again, just back testing. Already had the cross. Here we got the cross before the Rona. Here we got the cross in 2015, and then before that was 2008 and 2000 as well. Each time we basically came down to 200 exponential and simple or something like that. We already came down to the pre-Rona highs. We already violated key fib levels that we haven't even come close to on the stronger indexes. So next downside target would be to the 0.5. Next upside target is to the 236. And then obviously all our moving averages and everything. And then we talked about this scenario before we ever even got down to the 382, before we got back down to this previous support level. We talked about the scenario. Once we got to that level, we could either see a bounce back to back test the 236. I think this is an old chart and I pulled up the wrong one. I think I've been using another one recently. So sorry about that if this is confusing, but basically this was our back test of the 236. Once we lost that level, we hit the 382, and then from there we say, are we going to go to the 0.5 now and go lower, or are we going to bounce back up and back test the 236? So we see obviously once we got here, we're now back testing up to the 236, the 200 exponential, the 200 simple, and then from there we would expect that pivot to basically then act, and we do the same thing again. We say, okay, great. So we made it to this one. What's going to happen to the next one? Are we then going to go back up here and try to come up and, test all-time highs? Probably not. I mean, just because the Russell's trash. But could happen. Or are we going to come back down here once we back test the 236, come back down to 382, and if we come to the 382 again, well, we know what happens then. Then we're headed to the 0.5. So this is how we kind of look at it. It's like choose your own adventure. When we got here, we chose to go back up. And then when we get here, we'll choose to either go up or down from here. And then from where we go there, we'll look at it again. And that's how we just treat all of this. There's always a probability it goes up, always a probability it goes down. And then we look at the risk reward. We look at the trend. And then we try to take our best, if it adds up, if it makes sense, if all the pieces are there, there's enough breadcrumbs or enough confluence, then we'll take advantage of the trade. So back testing on the weekly and then on the monthly. Oh, yeah, I think I already did all this stuff. Okay, yeah. I'm like, man, this seems so redundant. So XLI, industrial, back test of the 200 exponential and simple. As soon as we took out that resistance, we basically went parabolic right here. Again, are we just suddenly, all of a sudden bullish on this? Or is it just doing the same thing? We see, obviously, going back to 2008, we've been operating inside this channel. The heart line has been very strong support. The Rona jump right here took us all the way down to the bottom support, which we had never touched before. So you really wouldn't even know to do that if it wouldn't have been for this low right here and just drawing it off of the tops. So we fell slightly short of the top right here, slightly short of our target. We went into distribution and then we broke down from that. And now what are we doing? Well, we were about to confirm an 821 cross to downside, which has led to the 200 exponential and simple, very deep retracements. So we're just back testing it. We're just making sure. Hey, are we sure we're going to go bearish here? Because if we save the trend, we go to new highs. If we confirm the bear trend and start selling off, we probably go to 200 exponential and simple, maybe even new lows. Hard sell, very bearish on longer time frames. This is last chance. This is essentially the point where if the bulls don't take back over, the bears win and we go much lower. But the bulls could win. It's possible they take over. XLP, consumer staples, still very bullish. One of the most bullish sectors. Reclaiming the 200 exponential and simple. 200 simples on top of the 200 exponential. So not a great setup right there just to begin with. On the weekly though, still very, very strong uptrend. We had the 821 cross the downside. We're now trying to cross it back to the upside. Bunch of green histograms. Starting to try to roll over. Building a little bit of strength. Still very, very strong on the monthly here. We bounced to 21 and we're back at the 8. Now, if we consolidate between here and here, basically like 71 to 75, which I think we're likely going to do, kind of range around here, the longer we spend ranging, the more likely we are to break down from this level. And we see we now have 3 red histograms in a row. Hard sell, we left the bullish control zone. Stokes are accelerating to the downside. So it does look like we're getting more indications than not even on our stronger sectors, that we probably are going to see some weakness. But again, we might see a few days or a couple weeks even of continuation. But by the end of the month, likely we are, headed back lower. XLF financial underperforming for sure, still well below the 200 exponential and simple, still well below that previous peak right here. Inside the bullish control zone, blue slope, bunch of histograms, green 8 and 21 cross. It's trying to move back up here. It's just underperforming. Obviously, we know that because financial is trash in our current conditions. And, contrary to what other people say, we know obviously investing in financials has not been the place to be. And very clearly, we've been proven right on that. So now that might not always be the case. And we'll gladly embrace whatever sector of the market is doing well because we don't give a shit, because we don't care. We just want to make money. So that being said, on the weekly chart, bouncing at 200 exponential and simple, hard buy, leaving the bearish control zone, bunch of green histograms, back testing key resistance. Looks like a decent setup right now. The thing to pay attention to, though, is how many times have the bears been in control and how many times has it been for that long and what period of time are we talking about? Back in 2011, the bears were in control for that amount of time while we were in a bear market. We see how long it's green down here, how much of a green highlight there is. We see it here. This whole time from 2011 till 2021, the bears were never in control like that. We're in a very strong uptrend. So the fact that this time we're back testing the 200 exponential and simple, we're potentially compromising the trend, and the bears have clearly been in control for quite some time, tells me, hey, wait a minute, this might be what a transition looks like right before you go into a bear market. Doesn't have to be, but it's worth paying attention to. And then on the monthly, very, very strong, but we see what looks like a blow off top, very close to confirming an 821 cross to downside. We have clear support from 2020, 2018, and all the way back to 2007 around this level. So this is a very, very strong support on financials. I would expect us to basically chop around between $30 and $34 while the market makes up its mind. Obviously, hard sell signal, Stokes to downside, all red histograms, red slope line. We're below the slope line. Are you sensing a pattern? I know you are. So real estate, XLRE. So we're seeing some strength out of real estate. It didn't quite take out that previous high yet. It is retesting what is a very, very strong resistance or support level. Very clearly support, resistance, and now acting as resistance again. Also lines up with the 200 exponential. 200 simple is slightly higher. Not crazy to think that we get a push up here to hit that level before we get rejected and go lower. If we start closing above that level, maybe we start getting bullish again. Who knows? Short-term time frames, bulls are still in control. But what is this really? Real estate's been strong, and then it threatened the 200 exponential and simple, put in a lower high, broke down below the exponential and simple, put in a lower high, broke down to a new low, and now what are we getting? The reversion to the mean, the back test of the bear market. Do we confirm here that the bear market is in fact on and we go much lower? Or do we reclaim the 200 exponential and simple, flip them back bullish, and the real estate nut continues? Probably we're confirming into a bear market, but we'll see. And then just skipping over to the monthly chart. Again, what's happening here? 8 and 21 were being threatened, and we just got a massive pushback up to back test those levels to try to stop a capitulation candle from showing up. So again, very bearish on long-term time frames. We just got the dead cat bounce we were expecting. We got the exact monthly candle to a T that we mapped out in advance on literally every single one of these charts, with the exception of like 3. So 8 ball definitely deserves a raise. I'm going to have to paint that thing gold because it is the shit. XLV, healthcare, obviously one of the stronger sectors. Still, reclaiming the 200 exponential and simple. Had a nice aggressive move back up here. Historically strong during, economic instability, during recessions, etc. Daily still looks good. Weekly, reclaim the 8 and 21 back on top of it, looking to close back bullish again. We saw that happen right here. It went to a new high and then it broke back down. So still a little choppy, still below the histogram on the weekly, but a bunch of greens, or below slope on the weekly, a bunch of green histograms and hard buy signal. It looks strong. I mean, we're consolidating this range and it's basically just like a broadening wedge right here. Sort of looks like the head and shoulders coming back up here. We'll have to see. This little outlier right here kind of throws it off. And again, like it sort of looks depending on if you're going by like wicks or bodies or whatever, you can kind of see it's essentially got like lower and lower lows, and then it kind of has like, you know, something like this going on, you know, without being like beautiful or anything. You know, when I look at this, I think, okay, if we're putting in, you know, essentially lowered lows coming down here, hitting this level, we're putting in essentially higher highs, and this thing's showing some bullish signs on like short to medium time frames. If we start pushing back up here and we take out this resistance, which would act as a shoulder, you know, we basically throw away the head and shoulders, and then we say, okay, this probably is coming up to new highs. And if it comes up to new highs at any point in time, we could get the break and a massive measure move to the upside. It's not likely that we get a break out of this pattern to the downside, in my opinion. It's much, much more likely that this pushes to the upside and then comes all the way back down here to the downside and just ranges in a broadening range before the break. I don't think we're just going to get a sudden, like, massive break to the downside. I think we probably just consolidate and then eventually hit our targets by time, not necessarily like losing the range. So we'll see. Doesn't have to play out like that. Maybe the head and shoulders plays out. Maybe the broadening wedge plays out. Maybe we're just drawing on a chart for fun and we don't know what we're talking about. I guess we'll see in time. There's no way to be sure. Could be a combination of all those things. Monthly XLV healthcare has been in a massive, massive run up since 2009, 2010. Still on top of the 21, still very strong. We are seeing, you know, we saw a similar kind of like chop sideways, sell off, etc. In like the 2015 to like 2017 period, a couple years sideways, and you know, some scary candles and wicks and whatnot. Still never lost the trend. So that's what we're paying attention to. Are we just going to see more kind of chop sideways, you know, for a year or so? Red sell signal, left the bullish control zone, all red histograms, lost the blue slope line. Very similar signature to what we saw taking place right here. Actually, we didn't lose the slope line yet, but very similar to what we saw in that period. So maybe we don't take a bunch of like losses or damage to the price action on healthcare. Maybe it just goes sideways for, you know, a couple years. Seems likely, definitely possible, and we see some confluence in the sector. And then also, you know, think about it fundamentally. It's like, well, yeah, they do good, but not great because the slowdown, but they do better than everybody else. While everybody else is getting wrecked, losing value, they're at least just going sideways. So XLB materials, again, backtesting key support. We see how many times we had this key level. There are a couple gaps up here. It's pretty weak, but maybe we get up to 200 exponential and simple. I'm going to just skip right over to the monthly. When we look at the monthly, it had a nasty, nasty candle right here. Got to pay attention to materials and industrial as they are often like leading indicators. When they start seeing weakness, the same way like transportation or semiconductors, some of these other things, like lead everything else by like, you know, months and months sometimes. So if we see a slowdown in manufacturing, in industrial, in materials, often they will be, you know, again, a canary in the coal mine for what's to come in the other sectors. In this case, we see tech is very, very much acting as a canary in the coal mine for like what could reflect into the economy. Because, you know, a lot of these tech jobs are good paying jobs. There's a bunch of speculative jobs in like crypto and, you know, all these other like just insane companies that aren't making money right now. And as these companies make cuts, you know, 10 and 20% cuts to their workforce, all of a sudden a bunch of like good paying jobs, you know, 6-figure, 7-figure jobs, people are being laid off. That's big earners. And those big earners spend big money and have a lot more disposable income. So that trickles down into, you know, the guy making, or girl, making $1 million a year loses their job. And you say, yeah, who cares? They can afford it. They're okay. They should have been saving money. They go get a new job. Maybe they don't make as much. Sure, that's definitely true. But that same person who's making $1 million is also spending a ton of money because maybe they're like, you know, Ubering everywhere or buying expensive car insurance or paying a driver to drive them around in their limousine, or maybe they're having lunch while they're on their lunch break. They're having lunch at a nice restaurant in town and they're working from the office, and inside the office there's a bunch of people getting paid to, you know, clean and deliver mail, and there's just so much more complex stuff going on. And then that person loses their job, and then maybe they sell off some of their assets. Maybe they sell some stocks. Maybe they sell their second home. Maybe they sell, so many other things come down from this. And then eventually, the guy who is running the hot dog stand outside on the street doesn't have anybody to sell hot dogs to, so he goes out of it. So it comes all the way down from like the higher rungs to the lower rungs. And when we see these high paying jobs going away and people slowly, that same guy is probably not going to end up working at Starbucks from making $1 million at some tech startup. But maybe he ends up working somewhere, for $250,000 or whatever. Maybe the person who was making $250 now is making $100. And then all of a sudden there's overqualified people competing for those jobs that they probably should have had the whole time. And then all of a sudden that guy who was working at Starbucks now is working at, some other company making $100,000 a year. And then the guy who was working that job before that was then making $250 a year is back for that job. So now you ditch the guy who used to work at Starbucks. So then he goes back and he works at Starbucks. So it just trickles down. And then the guy who took his job at Starbucks doesn't have a job anymore. And now he's homeless. So, there's a lot more that goes into it than just like, oh, who cares if some tech companies lay off a couple people? There's so much more to it. And the first to go are those big, expensive jobs at the companies that don't make money. But that doesn't mean that, we don't see big layoffs from all kinds of other important areas. So definitely worth paying attention to what these, there's a lot of key signals from the market, signals from the economy, and, people just don't see them. And the funny thing I notice is everybody sees them after it happens. Everybody does great technical analysis in hindsight, but very, very few people are looking at these things in advance, able to spot those things and then take advantage of them. So that's the important thing for us to do, is not only to identify trends, but to take advantage of them. So here we have XLY is next, our consumer discretionary. And again, we saw quite a bit of weakness in consumer discretionary. Why do we see the weakness in discretionary first? Because again, that's a lot of those, middle class, upper middle class purchases. Whether you don't have to be middle class or upper middle class to buy consumer discretionary goods, but most of those goods are being sold to people that have extra money to go out and spend or waste or whatever you want to call it. So again, that's why this was breaking down and showing weakness before many other charts were, clearly confirming into a bear market, clearly, a much deeper retracement, to the 0.5 and to the pre-pandemic highs right here, as where many of our other charts barely got below the 236. But here we're all the way down here at the 0.5. So already a much deeper retrace, already a much more bearish move. So we had a nice little bounce off of that move, but long term, still very, very bearish, especially on sectors like this. But again, another great canary in the coal mine. And again, we're just back testing the cross, which has already taken place. If we stay below this level, the bears don't have to do anything. If we just stay below this level, we just see more and more red, and then eventually we capitulate. So it's up to the bulls now to get back on top of this level. So the ball is in the bulls' court, and the bears are winning, but the bulls have been in charge for 10 years. So they could lose for a little bit, and it wouldn't be crazy. They could give up, a little bit, and it wouldn't be crazy. I don't think so. XLU utilities, very, very strong in comparison. Obviously, like the strongest of the sectors we have looked at today. Coming back up here, so far a lower high, threatening that previous high or the all-time high is key. That's obviously what we're paying attention to. We still have a high, a low, a lower high, a lower low, and technically a lower high. So if we do start rolling over, not crazy to think we put in a lower low and we touch the 200 exponential and simple on the weekly. We got close to them, but we're well above them. A lot of our other 200 exponential and simple on the weekly are clearly in like bear trends. Most things just bounce off them, and then we go to the monthly. I mean, this thing is amazing. I mean, utility's still booming. Since they flipped bullish back here in 2010, we have threatened the 21 a couple times. We had this little capitulation deal in 2020, but since then, very strong. And we see the 8 and 21 are actually diverging, getting further away from each other. The gap is getting larger. So the trend is actually strengthening to the upside. So still very, very strong on longer time frames. It's possible we develop some divergence or something here. It's possible like we honor this hard sell signal that rolls over and then, bearish divergence prints on the monthly. for sure, definitely a possibility and worth paying attention to. But for now, my base case is, we should respect this, and we essentially have a flat resistance right here, and we're getting ready to bang up against it again. Not crazy to think we see utilities at new all-time highs very, very soon. Definitely, one of our strongest sectors and one of our proven sectors to do well during economic downturns. XLC communication, very, very weak. Very, very weak. Look at the difference in this chart versus our other ones. We confirm it to the bear market here. 200 simple flips over. We confirm it to the bear market here. We get a pathetic back test and then don't even get back up to 200 exponential and simple here. Here we are at the lows, and this thing hasn't even moved. We came all the way from the bearish control zone all the way up, to the top of the range. All the way down here, blue slope line, all the way back to neutral. And the price action has just went sideways. This is exactly what a chart looks like, in my opinion, right before it gets ready for another big leg lower. Communication sector looks like it's ready for a big leg lower. So what leads it lower? I don't know. Maybe one of these companies reports some bad earnings. Maybe, something to do with one of these trash tech companies getting in trouble with the, SEC or some other regulatory drama. I don't know. Sell by sell. This thing looks absolutely horrendous. It really looks like we're ready for another big leg down. This is obviously just a lot of support through here. A back test of the 2020 highs. A back test of the 0.5. This is the worst chart. It came all the way down to 618, which is the deepest retrace we've seen yet. And we know, here we bounced through the 236, hit the 382, back test to 236. Then 2 steps down to the 0.5. Don't even get back up to the 382, and then down to the 618. Back test to 0.5. Not crazy to think we're headed down to the 786 next. So somewhere around like 46.38 over the next couple weeks or months, something like that. Communication looks disgusting. I mean, look at this. That is disgusting. At some key support levels, we know that in the bearish control zone, we know that we have a buy, sell, buy signal, potential bullish divergence from the jewel. Bunch of green histograms trying to backtest the 200 exponential and simple. Close to confirming into a legit weekly bear market. If that 200 simple rolls over right here. And then we don't really get anything out of the monthly here. We have the monthly cross. Again, back down at support levels in the bearish control zone. All red histograms. I mean, you're catching a knife on this thing trying to buy right now. Again, it looks like it is ready for another disgusting leg down. Probably a bloody waterfall in the very near future. And maybe that's telling us something about, what's to come in the broader markets. XLK, tech, touch of 200 exponential, 200 simple slightly higher, took out the previous high. Pretty clear resistance support level through here. Daily still looks okay for a potential little bit of a leg higher here. I wouldn't get crazy at these levels though. We're at the levels where I would expect the take profits to start happening. And again, we're going to start seeing some of the overperformers taking profits first, and we'll start to see the breadth of the rally start to narrow as less and less things show strength, less and less things break out. People keep taking profits on some of the weaker stuff. And that's our signal that, okay, this is probably topping out. We're going to look for volume. We're going to look for, breadth of the market. We're going to look for all these key levels to tell us, hey, which way is this pivot point going to play out? And again, my base case is that we go slightly higher and then to new lows. XLK on the weekly, didn't even get down to the 200 exponential and simple on the weekly because it's been so strong for so long. So the daily chart's terrible, but the weekly is actually stronger than a lot of assets. So very interesting on tech. And then on the monthly, back testing the 821, trying to stop the cross, bullish engulfing candle, hard sell, accelerating trend to the downside, all red histograms, still blue slope, but below the slope line. Basically deciding right now, hey, we haven't been in a bear market since 2008, 2009. We're really close. You sure we want to do this? Back test at the swing. It's decision time now, which that's great. We're going to find out very, very soon if we should be massively short on these markets or massively long on these markets. And I hope it's long because life is so much easier, but probably going to be short. XLE energy still very strong. We got the back test of the 200 exponential and simple. We got the 821 cross to the upside. So now we're just looking for this to play out. And then we're going to pay attention to, does it come back up here, put in a B, and a 618 lower high, a 786 lower high, and then we go to a lower low? Or are we just bouncing this level and going straight to new highs? Either way, I think eventually we go to new all-time highs. It's just a matter of which one. One of these strongest sectors, definitely we're paying attention to that the 200 simple is close to overtaking the 200 exponential. If we stay above these levels and don't go sideways for too long, we'll be okay, especially if we start moving to the upside. On the daily in the bullish control zone, all red histograms, getting ready to flip the slope line potentially over blue and cross the zero. I think it's pretty realistic to think we're putting in new all-time highs here, or new cycle highs at least I should say. Probably new all-time highs, but definitely new cycle highs. $100, we got up to like 92. So yeah. Again, we had a deep retrace. We saved the 821 cross. It's back bullish again. So again, if we stay above this like 75, 50 level, bull cross. Bears are still in control. All red histograms, red slope line. What is this? We just flipped from a bear market into a bull market for the first time since 2015. Very, very bullish. Complete bullish posture. The only thing that could be more bullish on this weekly chart is if we were a blue sky breakout, putting in new all-time highs. So again, very, very bullish. Does not mean we don't put in a new, a lower high right here and then come all the way back down to like 58, 55. But I do think we go to all-time highs, at least cycle highs, before long here. And again, we just see the back test. Back on top of the 200 exponential and simple. Lots of resistance through these level here. But essentially, we're just chopping through that resistance. And it looks like we stay above the 200 simple long enough, stay above the 200 exponential long enough, we're probably headed to new all-time highs. Right now, we're just back testing. The question is, are we done back testing? Or do we back test down here to like 58? But eventually, probably headed to new highs. Obviously, still very, very bullish on energy. Hard sell at the top of the range. Still inside the bullish control zone for now. So I wouldn't get bearish on this. It likely comes down to 80 here. Has like another month or two. Maybe like downside or sideways. And then bounces. Comes up here. Probably prints some bearish divergence. Maybe like 1, 2, even 3 drives of it. And then we break down. But in the meantime, that probably gets us at least back to new highs. If not new all-time highs. So we'll see. I would not get bearish on this long term right now. Man, honestly, to tell you the truth, I wouldn't get bearish on this on any term right now, but also make sure we're positioned that if we do end up in the 60s on this, that we're not doubting ourselves. We got to have legitimate conviction, but not crazy to think that, I mean, this is the place to be, obviously, going into the future. The real question is just, is it going to be the place to be 2 or 3 months from now, or is it going to take 6 months to a year before we're ripping and rolling again? So XCN, transportation, trade setup almost played out here. We're up the better part of the way, like 12 out of the 15%. Just a back test for 200 exponential and simple. Still very bearish on this chart, but tons and tons of confluence from these levels. We got the breakdown, measure, move, essentially of our topping pattern here. Came down to the bottom. Fib levels are bottom of our previous highs. Lots and lots of support through this area. Probably does not last, but I think it looks like it's going to play out though. At least get a little bit more continuation here. Lots and lots of support from this level. You would expect all of this support to hold up at least the first time we touch it. But we are getting back into the resistance. Hard buy on the weekly, bunch of green histograms, bouncing the 200 exponential and simple, threatening the trend on the weekly. So we don't want to see it come back down lower. On the monthly, we're just back testing 821 potential cross. Last time we saw it happen was in the Rona. Before that, we saw it briefly in like 2016 after our like 2015 top. Hard sell, Stokes accelerating to the downside, all red histograms, red slope line headed to zero. It likely gets rejected and goes much, much lower. It's going to be a long consolidation to chew through all of this price action right here. So I don't necessarily think this is just going to like get hit really bad. But again, going down to like 60 is not crazy. And then just ranging between, 60 and mid 70s. Seems likely. And then last but not least of our sectors, just breaking down the semiconductors. I've got XSD on this one. Again, we got the back test at 200 exponential and simple. You guys know I was bullish on semis. Short term, some nice trades. But, this looks suspiciously like, this right here. And it doesn't have to play out. I could be completely wrong. But this is literally a textbook of everything. This is a textbook of what it looks like when the 200 exponential and simple rolled over and we crossed from a bull trend into a bear trend. This is a textbook topping pattern for a head and shoulders. And then it's like textbook like Fibonacci pattern as well. So again, does not have to play out, but this is so far just an absolute textbook topping pattern. I mean, if we come up in here, we hit this 236, which we almost already did, or go slightly higher, as high as like that 198 level, and then this rolls over, we come back down here, and then we break down, and the head and shoulders tops out. This will literally be the most textbook version of, you know, a bull trend crossing to a bear trend with the distribution head and shoulders topping pattern before a breakdown to previous key levels of support. I mean, this will literally be in books. And people will be like, oh, the head and shoulders that I didn't see till after it happened, but now I'm going to talk about it because I'm not a technical analyst. I'm a news reporter. And by news reporter, I mean a YouTuber. So definitely pay attention to this and the implications that topping semiconductor market could have, especially after our massive run up, essentially, 12 years or so. We'll see. Hard buy signal, pretty aggressive knife up here, pushing up. Is this just a bearish reset before we go lower in the breakdown, or are we going to go bullish from here? You guys know how I feel. On the monthly chart, again, we see the sell by sell at the top of the range. That basically, this looks pretty damn toppy to me. Again, we threatened a couple times the cross down, and it didn't happen. So if we do get the cross this time, it's going to be pretty serious, as it will be basically like the correction off of a 10-year bull market. And depending on if we go from the bottom right here or how we're looking at this, we could get some nasty swings. And we see some very clear support and resistance on the way up. So it seems very likely this is in fact the top. It also seems very likely we're going to come down to that 236 and that pre-pandemic high, like 117. Obviously a little more of a move. If we look at the head and shoulders measure move, potentially takes us down, as low as the 382.73. But again, after that, I mean, a bullish retrace would be the 382 and then new all-time highs. 0.5 would still be okay. We're going to get down to 50. Are we going to get down to 33? I mean, let's hope not, because the world doesn't look good if we see semiconductors in that big of a bear market. But definitely a possibility worth paying attention to, and definitely a canary in the coal mine, one of many important ones. And each of the canaries tells us a little something different, which is why it's important to pay attention to them all. So yeah, I'm going to jump in the chat over here real quick, and then we're going to keep ripping through these assets. We're about an hour and 52 minutes in. Definitely went a little long on a couple things there, so we may keep it a little short on a couple of the other ones. But it's very important to pay attention to what's happening here on the monthly time frames and what's likely to happen. Let me just scroll back up here. Angel says, XDC, what are your thoughts? Appreciate it. Geo Luke says, my dog ate my homework. Crypto Galt says, making a complex world simple. You are the clearest mind in crypto, bro. Thank you for your extreme generosity. Of course, brother. Thank you for your kind words. Paraj says, amazing. Bang on stream as usual. Thank you. Of course, brother. Thank you for the kind words as well. Digital Durwood says, take a look at the TSX index and compare. Interesting. Take a look, guys, and let me know what you think. I'm just messing with you. Calma Betty says, what's up? Crypto Trend Trader, great show as usual. Thanks, brother. Appreciate that. All right, so let's keep ripping in here. All right, so DXY we already took a look at. Tesla hit our target on Friday there, so very nice for anyone that was still in that trade. Obviously, I made a mistake in hindsight getting stopped out with a slight profit on that. But again, I didn't know what was going to happen there. Should have had a little more conviction. Should have waited to move my stop loss up. Shoulda, coulda, woulda. It is what it is. Always good to make mistakes and learn from them. So maybe in the future I'll be a little bit more hesitant to move my stop, or I'll wait for it to move a little more in my favor. But regardless, anybody that took that trade, congratulations. Nice little 35% move with a beautiful 4-to-1 risk-reward ratio. And Tesla's still looking pretty good on our shorter time frames. Still looks okay on the weekly. got back above here. Looks like it wants to cross that 821 back to the upside. Obviously, one of our stronger, cultier stocks. The monthly, that candle was big. That candle was big because now the 821 doesn't look nearly as close to crossing. But again, you know, we saw a similar situation like through here, through that 2015 top, and then Tesla didn't actually go down. It just went sideways, you know, for basically like 5 years. Now, it doesn't have to happen. I'm sure Tesla's going to be doing crazy innovations, and all of a sudden it's, you know, market cap combined all the other car companies. I'm sure that that's normal, even though they only make like, you know, 5% of the cars. But who knows? Who knows? Maybe they'll start making like 50% next year. Maybe all the other car companies will stop making cars, and then Tesla will be making 100% of the cars. So there you have it. Boom, solved. So it's not overvalued. Told you so. So on the monthly chart here, bunch of red histograms. Likely see a bounce from the blue slope line around here. Sell by sell at the top of the range. Trying to fight the trend. It looks like basically we should be correcting, but there's enough people that are just diamond handsing that we're not. So if they can diamond hands long enough, maybe we go higher. But eventually, probably Elon takes a jump on their head again or something. I'm sure we'll see some like article and it'll be like Elon under investigation by allegedly the SEC, something to that equivalence, and then it'll be like, oh, or maybe he'll have to sell some stock to buy Facebook or something, whatever. So NEO, so we've been talking about China. I'm not going to go into like deep look at these. Again, canary in the coal mine, back test after capitulation, longer downtrend. Baidu was trying to get bullish again, and it looks like a rejection. Breaking down from this level is going to be bad, and we likely revisit the lows. Same thing with BABA. Again, attempted to flip bullish again and already headed down to revisit the lows. Earnings coming up again. They've been sort of like hit and miss. They ran up on earnings here when they beat. They went down to new lows on earnings here when they beat. Here they gapped down and went much lower on a miss. Here they got beat and then went much lower. Here they missed and went much lower. So honestly, the way this chart looks, you know, of the last basically what, 1, 2, 3, 4, 5 of like the last 6 earnings, there was one time when the earnings were good and they ran up, and the other 5 times, whether they were good or bad, it went down. So I don't like those odds. I would say probably they report on August 4th. So in the next few days, regardless of if it's a beat or a miss, it probably goes to new lows. If it's a beat, you know, maybe it's less likely. But if it's a miss, I mean, it's headed to new lows. And statistically speaking, regardless, it's probably headed to new lows. Does not look good. You know, and it had its chance. China had its chance to basically flip back into a bull trend, at least temporarily, and it failed. So obviously, you know, it's not some conspiracy. The price action returned to fair value. It returned to 200 exponential and simple moving average. The market then, at that price, everybody cast their votes by either buying or selling, whether it was overvalued or undervalued, even though historically it was at fair value. And there were more sellers than buyers. More people took the opportunity to sell into strength at a fair value than took to buy into, you know, resistance at the fair value. And now we're going lower. So that's what it is. You know, we get to these key areas, everybody votes, and then we see what happens. And then after we break that area, everybody votes again when we get to another area, and we see what happens. So, you know, that's slinky theory, obviously. So NVIDIA, so this trade setup is, whoops. This trade setup is almost done. Definitely been underperforming. I mean, this is just pathetic. I thought we would see, with that big candle we got on a lot of other stuff, like the Microsoft trade, the crypto trades, like so many other trades played out beautifully. And this one is just dicking around, you know, and normally NVIDIA, I mean, you can't be mad at NVIDIA. It's done phenomenally well for us. But that being said, it's like, damn, really? But, you know, honestly, I think a lot of that, like, CHIPS Act stuff was priced in. A lot of, like, the bullishness on semis or, like, the dead cat bounce on semis is priced in. But very pathetic. I do still think it gets there, but, I mean, I'm going to tell you the truth right now. I've taken profits on a lot of our trade setups already, and I plan on continuing to jump the gun and take profits if necessary or anything. I'm always about just locking in gains. You guys know that by now. And as far as going into like longer term time frames, we sort of see this already. You know, basically Nvidia has been in a long bull trend, had a consolidation bear trend right here in 2019. It looks like now we're likely to confirm the cross down. Again, we don't need to see a capitulation necessarily. It could just chop sideways for a while. But this is looking pretty bearish right now from where we're at. And again, it just looks like the back test before we likely confirm the bear market and go lower. AMD, very similar, slightly, probably about the same, just back testing the 236. Everything pretty much looks the same on like all semiconductors, except Intel. Intel obviously is trash. Gap down to new lows. So everything else is not putting in new lows right now, and Intel is putting in new lows. Had a earnings miss. They're just a joke. They're a complete trash joke, and basically like need bailouts, not bailouts, need subsidies so that we can bring home manufacturing. It's a total joke. If you're making billions of dollars, you probably don't need taxpayer money. I mean, why don't we just nationalize everything and just say fuck it? That was sarcasm, obviously. But Intel, trash, complete trash, trashiest trash to ever trash. One day it'll be an opportunity, though. I mean, I can't believe they can't. Imagine just being invested in Intel for the last 20-something years and still being underwater. Fucking pathetic. Pathetic. While the rest of the industry has just boomed. So Apple, sell by sell. On the daily, it looks really bullish right here. Reclaim the 200 exponential and simple. A gap back up above those levels. Nice earnings beat. You know, nice guidance. I would be very careful here, especially with that gap. It looks pretty toppy right here. Again, we still have a high, a low, a lower high, a lower low, a lower high. So basically, Apple has to threaten the all-time highs at like 180 before it can even be like, okay, we're actually are bullish. And this isn't just like, you know, a fake out or just exaggerated bounce. The weekly, it is getting ready to cross 821 back to the upside. Definitely looking good. Hard buy coming out of the bearish control zone. All green histograms. Again, Apple very strong compared to most of the market. And then on the monthly, we threatened the 21 and we're already back above the 8 here. We did get a hard sell, left the bullish control zone, all red histograms. Probably our bounce off of the slope line right now. It is still blue. Again, the main thing to pay attention to is just, did we put in a new high or not? Is Apple going to be putting in a new high while everything else is not? Is Apple going to be the first thing that puts in a new high and then everything else does, or a lot of other stuff does shortly after? Or is Apple getting ready to break down and it's going to agree with the rest of the market and it's just staying strong for now? We don't know for sure, but I would say probably. It's hard for me to picture a world where Apple is just ripping and roaring to new all-time highs and like literally everything else is just getting wrecked. So I think the most likely scenario is that Apple just looks better than it really is and it's getting ready to eventually sell off, but it's just the strongest asset right now, or one of the strongest. But again, if we see new all-time highs, maybe Apple is telling us, hey, actually, you know, it's over. Doesn't seem likely, though. Does not seem likely. Google, definitely like some underperformance here, just chopping around inside this channel after our split. Obviously, the earnings was pretty bad, but not as bad as people thought as we bounce back up to retest that resistance in white. Just consolidating around this range right now. Still hasn't back tested the 200 exponential and simple. Still a ways off. Also staying very strong. Still hasn't even made it down to 200 exponential or simple. Starting to see some weekly short to midterm bullishness develop. But what is it really? A back test 821 trying to stop the cross. Hard sell signal. Stoch's accelerating to the downside. All red histograms. Below the slope line. Slope is still blue, but nearly flat. Looks like we are getting ready for a aggressive leg to the downside on Google. Where does it take us to? Probably slightly lower than our wick to the 382. $100 again, but realistically, next real target to downside is like $88 on Google. And then we have Amazon. So Amazon had the gap up from the 0.5 to the 382. So obviously that's what we were expecting, was our double bottom W right here. And when you break through the 0.5, we would expect the equal move from the bottom of the pattern to the top of the pattern. Obviously, we only got half the move so far, which also is a backtest of the 200 exponential. 200 simple, slightly higher at 146. 236, slightly higher at 154. We'll see if we get there, but looks good. I mean, this was a very, very similar chart to Google for a while there, and then Amazon had a pretty aggressive breakout. So does that mean Google's getting ready to do the same thing? No, it's probably just going to have pathetically chop sideways until eventually they run into each other. But again, miss on earnings, but not as bad as people thought. Decent guidance. Amazon to me is not. Amazon is more of like. I mean, anybody can order from Amazon, but I think the majority of their revenue, at least in the United States, probably comes from relatively middle class people. As I think, like, if you're poor, you're probably not like going on Amazon buying a bunch of stuff. You're probably buying things locally, like, for the most part, and cheap. If you're more like middle class or whatever, you're more likely to just be buying like random discretionary goods and stuff on Amazon, but still looking for some kind of deals. So it makes sense that advertising would be weak, and that's where a lot of Google's revenue comes from. But sales to maybe more like middle class, upper middle class, whatever type people, or not like the lowest rung people, would stay decent for now. As where we would see essentially like a lot of retail stores showing weakness. But then again, going into recession, we expect strength from, or at least relative strength from things like Walmart as opposed to like Target or something like, the dollar stores do phenomenally well in recessions. If we go into depression, maybe invest in cat food because that has historically done extremely well, and not because cats were eating it. Let's hope it doesn't come to that. Microsoft on the daily. So this move played out. This is one of the ones I took profits on. So beautiful trade setup. Congratulations to anybody that got in this one. Quick 15% move. Pretty pathetic trade setup. Back test of our head and shoulders topping pattern. Again, very, very technical here. Back testing the 200 exponential. Could go slightly higher to 200 simple. It's whatever. I'm not going to be worried about that little $15 move at this point in time. I'm definitely happy for the gains that we got here. We had some beautiful trade setups play out, some amazing gains, especially in some of the crypto stuff. But in my opinion, a back test into a bear market before a confirmation and potential continuation of the downside, not the time to get greedy over a couple extra percent here. So, whether we're moving our stop losses up or just hard selling, taking profits, one or the other should be happening when we hit these targets. We don't want to get greedy and give back a bunch of our gains. We don't want to turn winner into a loser. It would absolutely suck for any of these trades if you don't take profits, it comes all the way back down, goes below our entry, and then you don't take a stop because you're mad that you just turn a winner into a loser, and then it ends up being lower and lower, and then you turn a nice winner into a big loser. Last is Meta. Again, we talked about trash and how the worst trash right now is literally after all of everything moved to the upside. Meta is just hanging out at the lows. Miss on earnings, hanging out at the lows. This looks to me like it's getting ready for the bloody waterfall. And we know where the target is. Oh, yes. And I will get my target. Meta will drop. And it will go down to $121. Or it won't. But it probably does. And it's garbage. And it's trash. And it probably goes lower after that. But I think realistically, it breaks down here, goes to like 120. And then eventually probably gets a little bounce back up, back test the 236 macro, 184, and then goes much, much lower after that, straight to zero, or no, that says 82. $82 is probably like more realistic of a macro target. Now, do we get there? Maybe not. Is Meta just an amazing company and I'm just mean? Possibly. I'm biased though, so I don't know. I don't know if I can give you a legitimate answer. All right. Let's look at some cryptos. All right, so Bitcoin futures chart, nothing over the weekend. Obviously, we closed at 2,400. We had some price action over the weekend. We're right back at 2,400. Most important thing to notice is stochastics have went from all the way at the bottom of the range to nearly at the top of the range. Pretty aggressive knife stab up here, and we basically have done nothing. We crossed 821 back to the upside, which is good. We put in a slightly higher high, which is good. Blue slope line, momentum in our favor. All green histograms above the 0 line. All good. We're below the 200 exponential and simple, which is not good. Clearly in a bear market, but it looks like we want to see continuation to the upside. But we need to see that continuation actually happen at some point in time. Not just talk about how we could see it. We're also backtesting the 200 exponential and simple on the weekly. We are in between them. They're basically touching. 200 exponential is flip bearish. 200 simple is still bullish. We're still in the bearish control zone, trying to exit it. Knife is on top, and we're very close to leaving it and getting a bull cross. Bunch of green histograms as well. It is very possible we're headed back up to 28 or 30K. It is very, very possible. We're going to know very soon. But at the same time, I'm not mad to be locking in some gains in advance, just in case we're not. And obviously, I did lock in some gains on my Ethereum trade, Bitcoin trade, and some of my other shitcoin trades as well. Locked in gains on pretty much anything. Anything that we put a trade setup on, I locked in either some or all of my gains. So not the time, in my opinion, to be overly bullish or overly bearish. I would much rather take some gains, realize them, and then let the charts develop a little bit. So the monthly futures chart, very, very bearish, crossed to the downside for the first time ever, but doesn't have much history, so that's not really that big of a deal. In the bearish control zone, all red histograms. Does look like trash. So I told you guys what I want to see is when we get a big nasty red candle or green candle, I want to see the next candle on that time frame take out at least half of that candle. We basically came right up to the halfway mark. If we would have took it out and went up more, I would have been slightly more bullish. But half is okay. I'm okay with that. If we do less than half, it's very, very weak. If we do half, it's okay. If we do more than half, it's like, hey, hang on. We might not be done here yet. So I do like that we came up to half, but could have been a little better. Could have been a little more like aggressive with that, bulls. So I don't know why you guys weren't buying, but pump those bags, baby. Bitcoin Bitstamp chart on the daily. So we ran up a little bit over the weekend and then just gave it back. We're right back where we started, slightly lower. No big deal. It is what it is. Hard buy at the top of the range. 821 across the upside. Momentum in our favor. Slope is in our favor. Same thing. I don't like how long it has taken for this move to take place, and we've gone nowhere. We've spent so much energy. Like, I mean, when I say nowhere, the wick down was to like 17.6, and we're at 23.4. So that's great. It's not that we didn't go anywhere. It's just pathetic how far we went. And now we're seeing clear bearish divergence developing between our peaks right here. I mean, unless this literally moves all the way up to like 32 to 34,000, we can't invalidate the bearish divergence. So it's just looming over our heads. And obviously we have some targets up at that level. So it is possible we get there. It'll invalidate a lot of stuff. So 200 exponential and simple on the weekly are much more spaced out here. We close above the 200 simple. We're still below 200 exponential. 200 exponential is red. 200 simple is flat. It looks like we'll probably be range bound here between 23.5 and, or maybe 23 and 27. Looks like we were trying to exit the bearish control zone. Potentially going to get a hard buy signal here soon. Bunch of green histograms. A lot of resistance right here. This is a tough one. There's possibility we push up here slightly, but it looks pretty weak. Again, we're wasting a lot of time and energy here. Doing not a lot. The Bitcoin monthly chart on spot, I would have expected to be more bullish, but we got less of a bullish candle here. Didn't quite make it up to halfway, or at least like wicked up there and then got rejected. Bunch of red histograms, red slope line, hard sell. Stokes aggressively accelerating to the downside. 821 cross on the monthly. Doesn't look good. The previous times when we saw that happen, though, that was the bottom. But we just went sideways for like, 6 to 8 months. Here we went sideways for, 4 to 5 months. So if this is the bottom, we probably just go sideways for the rest of the year. So you're like, wow, thanks. That helps. Well, it is what it is. The best thing Bitcoin could do is go sideways right now. Bitcoin dominance. So we're watching this key level. Obviously, you guys know what I was saying here. If we break down from here, this changes my base case. and we likely see an aggressive big move to the downside to revisit the bottom of the range, and that probably means that altcoins are exploding to the upside. If we find support here and start moving back to the upside, we really just have to kind of reevaluate. It looked like we basically got a failed breakout consolidation, and then I don't know what's going to happen now. The fact that these didn't hold seems very likely that we could go up or go down from here. I don't really have a bias. Sell, buy, sell after that little spike. I mean, overall, I'm bearish. The 200 exponential was actually back on top of the 200 simple on the weekly for a while, and it just crossed bearish again. So everything pointing towards strength in shitcoins and weakness in Bitcoin? Maybe. Total market cap, bouncing the 200 simple, back testing the 200 exponential, getting ready to leave the bearish control zone, getting ready for a hard buy signal, bunch of green histograms. So what? I mean, it looks like we want to get the push back up to about 1.3 trillion. We'll see what happens. I mean, we're at the point now where a lot of these markets are saying, hey, we're knocking on the door to try to like not be trash anymore, not be in a bear market, not be garbage, not be in a downtrend. They're trying. So let's see. Let's see if the bulls have any strength. Now, one thing that's going to be a problem is previously we had like a gazillion assets with pumped up values that were all in massive bull markets. So it's going to be real hard to get that momentum and that many assets to go back into a bull market. So maybe we see a few things real strong, putting in new all-time highs soon, and then just most of the market looks like trash. Very possible. Very possible. Still bearish though. If ETH on the daily, so the measure move has almost played out. I obviously took profits on this and moved some of those profits into some trash coins, most of which underperformed. So I could have just been lazy and just sat in this trade and probably done equally as good. But also, we could have pulled out our profits, put them in something else, and then, it could have just absolutely ripped, and we could have, done even better. So it is what it is. Sometimes you do a little extra work and get nothing extra for it. Sometimes you do a little extra work, get a lot for it. Sometimes you do a lot of extra work and get nothing for it. But usually not when you're self-employed. So, so that being said, this trade is pretty much done. We're back testing from the 382 to the 236. Beautiful, like 76% trade. I think we locked it in around like 60 something. Very nice. Congratulations. Anybody took advantage of that. Daily does look like it wants to roll over. Hard sell signal. Very close to coming out of the bullish control zone. Remember, ETH was our canary in the coal mine, showing strength here when a lot of things were putting in new lows. We had this beautiful, very technical range, and it led us into this little bull run we've been in recently. So not crazy to think that ETH might top out first and start showing weakness while a couple other things still run, and then everything rolls over. So we'll see. Still well below the 200 exponential and simple. Would not be crazy to see ETH up here at like 22, 2300 if Bitcoin ends up at like 30, 32,000. But not necessarily my base case. Avalanche on the daily, still very, very weak, underperforming. I mean, it's flipped to 821 back to the upside though. So breaking through some of these levels, we likely just start seeing like some stair steps up here. $30, $36, $48. Probably don't ever get there, but worth paying attention to. Solana. Oh, I did the same thing again. I pulled up like all the wrong exchange charts. So just use your imagination. Again, sort of starting to look like a little bottoming pattern here. 821 across the upside. Definitely been an underperformer. We've got a back test for the previous all-time low. I don't even know if this is right because it's on Coinbase, but we'll just stick it out here. That was the bounce off the 786. Seems likely we're headed to the 618, so probably $53, something like that. Again, on borrowed time, though. Does it get up to the 0.5, the 200 exponential, the 200 simple? The breakdown from key support, $71. Probably not. I think that the popularity contest is over for Solana, but it could. It could. Polkadot, the old D, that old dot thought on the daily, back testing some key support right here. Pathetically underperforming. Could have a beautiful run to the upside if it wanted to, but somebody would actually have to buy it other than me, unfortunately. And I say unfortunately, but like obviously, it was a decent entry, so it is what it is, but drastically underperforming. But maybe it goes to like $13, but I doubt it. BAT going sideways, doing nothing. couple times threatening a little trend right here. Again, just so much chop right here. If it can break out from here, there's not a lot of resistance to like 58 cents. But again, drastically underperforming. But we were talking about like a potential for a 50% move here. And if there's one thing I know about BAT, it's always the slowest. It's like the last one to ever move. So sometimes the best opportunity, because you've already made gains in everything else, and then you're like, oh, I'll throw a couple bucks over here at the old utility token, the old BAT, and then all of a sudden it explodes to the upside in like 2 days, hits the move, you lock in like, 30, 50% gains, and it's a wrap. And again, there is a couple wicks and resistance through this area, but there's not a lot of price action up to that 58 cent level. So, there's basically a couple of candles and wicks through here, and then, this capitulation right here. So, maybe we get like a bounce back up here. That could play out real nicely. And again, it's one of those ones that's late to perform and usually underperforms. So definitely some possibilities there. So Chainlink, we got the majority of the move so far, breaking out, finding support on the back test of the breakout, the heart line, up about, it's like 20 something percent right now. It's okay. 47% was the target, underperforming a little bit for the back test at the top of the channel. But a nice move overall. But again, a lot of these cryptos are underperforming. And I think part of that is, or I know part of that is there's so many of them. Everybody picks their favorite few and bets on them. And then there's not enough momentum because there's just so many to bet on. If there was 20 cryptos and we started going into a bull market, you would have to pick out those 20. But instead there's 20,000. So every time there's a bull run, somebody out there, no offense, whatever. I ran into my buddy the other night and he's talking about like Safe Moon, and now there's Safe Moon 2, and how he didn't know it switched, so he accidentally bought. And I'm just like, dude, what the fuck are you doing buying Safe Moon? Like, do you mind if I just backhand you in the face right now, or like for your own good? Just blows my mind. But I mean, he's just fucking around anyway. But it is what it is. Anyway, there's just so many trash coins, so many assets that nobody knows where to put their money, so they all just kind of underperform, and then there's a couple winners. But often the momentum in those winners will last long and strong. Matic, speaking of one of those winners, has been performing phenomenally well. We hit our take profit up here, the 0.5, the 200 exponential. We got a slightly higher target at 618, and the 200 simple. We'll see if it gets there. Nice gains, though. I mean, this is our second trade setup that has played out just on this little rally right here. Beautiful one off the 786 to our initial targets, and then again entry on the back test. I mean, Matic has been really, really nice. BNB had some nice little moves up here recently to the top of the channel. Looked like it was trying to break out, get up here, that 200 exponential and simple. The breakout move would have taken it there, the measure move. Did not happen though. Still just consolidating at the top of the channel on resistance. Definitely a possibility it does get the breakout and move up here to 342. I'd be very, very careful on this long term though, as it does look like a gigantic topping pattern. Very clearly in a bear market. I don't know. It looks like it actually wants to pop up here slightly higher before rolling over. But we will see about that one. All right, and let's just rip through our last couple here. Wrap it up. So we did get that nice move on gold that we expected off of our key support here. The bottom of the channel, obviously descending channel, the bottom of the horizontal channel, key just on so many levels. Hard buy coming out of the bearish control zone, bunch of green histograms, blue slope in our favor. Back test of the breakdown, potential to cross the 821 back to the upside, bullish here. Again, what's going to happen? Probably just another in a series of lower highs. Quite a bit of resistance in this range right here. If we get all the way back up here to the 1822 level, it looks good. If we don't, we basically just confirm back into a bear market again, get rejected at key levels, and then likely go lower. And you guys know my longer term outlook on gold. We know the weekly is looking pretty sketchy right here, but we did just backtest key support, 200 exponential and simple. And then the monthly looks very, very close to the situation that played out in 2013, going into our massive bear market that lasted for decades and took away 40% of gold's buying power. Very, very close to confirming an 821 monthly cross to the downside. Not good. As the 200 simple is potentially getting ready, or has technically crossed above the 200 exponential. So gold is showing some serious signs that we may actually be topping out right here. So is this like Ugandan gold discovery legit? And they're just literally like plucking giant nuggets out of the river, and gold's going to just drop horribly in value? Probably not. Are we going to get hit by an asteroid made out of gold and just like, you know, anybody can just go pick up some gold? Maybe it's a little like radioactive, but who cares? And it just kills the value of gold? Maybe. Doesn't seem likely, but the chart's telling us that there's a definite threat that this whole narrative of inflation, this whole narrative of gold-backed central bank currencies and gold going into some crazy parabolic bull run, taking it to like $10, $20, or $50,000. Not according to this chart. According to this chart, gold is literally hanging on by a fucking thread. So, you're mean and you just don't like gold. You're racist against that color, the color gold, asshole. Maybe, I guess, but I don't know. I love gold. Like how it looks, like how it feels. I feel like I can fucking smell it. You could taste it. You can lick gold and taste it. I love gold, but the chart looks like shit. Or it's very close to looking like trash. Silver had a nice little run up here, back testing its capitulation. People are like, oh, this is the big one for silver. Silver could literally go down 50% and go up 10%, and people will be like, oh my God, silver's up 10%, it's on. It's like the stupidest people in existence participating in the silver market. It's absolutely crazy. Blows my mind. I'm like, wow, how did you get this many moronic people to all be interested in cryptocurrency, and then also have a very, very close second of moronic people that are involved in silver cult? And I just don't get it, but it is what it is. Two very, very culty groups of people, investors, speculators, whatever. It is what it is. I love both of them, but at the same time, when the charts look like shit, you should probably be careful. Silver putting in new lows recently, absolutely horrendous. A nice little dead cat bounce off of basically hitting our targets. Not much has changed here in the short term, you know, because basically we got to move to the downside. After we hit our target, we expect to move back to the upside. On the weekly chart, though, we lost the 200 exponential. It confirmed into a bear market. We're back testing the 200 simple. 200 simple is almost flat. We're very close to confirming a weekly bear market on silver. The bears are in control. We're getting a couple green histograms. Again, we're getting like that reaction rally after a capitulation out of a range that we were trading in for years. And where are we at? We're all the fucking way back. I mean, this was, you know, this was the range that silver operated in, you know, give or take from this whole period. You know, I mean, essentially, look at where we're at right now. This is silver price right now. If we look back on the chart here, we've been operating this range since 2013, basically either below 20 bucks or essentially like above $14. So for $14 to $20 has basically been silver's range for like 6 or 7 years. You know, basically just like this little chunker of real estate right here. And realistically, the range is more like, you know, the majority of the meat is like right here. So essentially, this is where silver lived for the better part of a decade. And then we got this crazy spike, and then silver lived here for a while, and now we just went all the way back down to here. So we capitulated to the downside. We got that, you know, little fake out spring, or that failed breakout to the downside spring, shot to the upside out of that pattern, got the measure move, and then went into a distribution pattern, broke back down. So theoretically, if we're going to start into an uptrend, we should find support somewhere around the top of this range, somewhere around where we did. But after that, you know, we have to put in a base and then go higher and then call this a higher low and then eventually put in a higher high. But I mean, that could take literally months or years on silver. And I think sometimes people don't realize just how badly silver has performed. I mean, if you literally bought any time between that $30 or $20 and $50 price, you have one other time to get out of it. And I'm sure everybody got really bullish here thinking finally it's going to new all-time highs after, you know, 30 years of going down damn near to zero. And then what happens? Same thing again. Capitulates back down. Now again, we're putting in higher lows here and it's okay. On the monthly, we're back testing the 200 exponential and simple and it's okay. But we see the 200 simple is back on top right here. So, this means we're losing momentum, and we're seeing gold and silver are both telling us like, hey, technicals are not lining up with all these people that have like super, super bullish outlooks for gold and silver going into the future. And I have a super bullish fundamental outlook on gold and silver going into the future. I am definitely one of those people. But the technicals do not add up. Something is not right here. Not going to spend a bunch of time on cannabis. Obviously down at the lows, consolidating. Don't want to consolidate the lows for too long because you just go lower. That's probably what happens. Expect new lows. We are showing a little bit of strength here, trying to get out of here. I imagine the terrible earnings were priced in. I mean, this was a big miss on Tilray's part. But so far holding up okay. Probably just because, maybe we're running out of sellers since selling off for so long. Love to see this at new lows, but building positions in all these cannabis stocks. CGC, same thing. CCJ, looking strong. Uranium breaking back above here. Obviously, we spent a lot of energy. We got back up to essentially a lower high. So we'll see if this rolls over. The other uranium stocks, I think, are telling a little more of like an honest story, as we're basically like confirming into a bear market and just putting in lower highs and lower lows. Maybe CCJ is telling the truth and all the other uranium stocks are lying. Actually, I think UEC looked pretty good as well. But like if you look at, 5 or 10 of them, or you look at an index, most of them are telling us more of like this type of tail, where we probably have some more downside. But there's a couple that look strong. So we'll keep an eye on them and pay attention. If the momentum starts to pick back up in uranium, I will gladly re-enter. But I do still think there's some short to medium term downside still. But very, very bullish long term. Very fucking bullish. GSG, commodities. So obviously we've been talking about this move on commodities. We basically had a disgusting sell-off. This looked very much like the oil chart before the oil chart got the breakdown. And then remember, the oil chart ended up revisiting the lows and tagging the 200 exponential and simple perfectly. But the oil chart is still hanging around here. So this is when we got interested in commodities for at least a reversion to the mean, dead cat bounce, lower high, something like that. So we had a nice move back to the 382 so far, almost to the 0.5. Potentially looking for a move up here as high as the 618, like 24, 27. But just pay attention to this and just think of how the oil chart could kind of develop like this and potentially come back up and threaten those highs. Now, again, we know on the daily chart, we put in a high on oil on the initial thrust up, and then we put in a lower high here. But on like the longer term time frames, we actually have a higher close here. So like if you compare like say the oil weekly chart to this daily chart, they look a lot more similar. So we'll see how it all plays out. But still very bullish on commodities long term. But again, just maybe not like after this move. I don't want to get bullish on it now. We're bullish on it down here. I'm neutral on it up in here. And then we'll see what happens from there. But I wouldn't be surprised to see just a little more downside after that nice little bump. On the weekly, we're back testing 821. We know if we stay below this long enough, the 821 cross back to downside, we're likely to get some kind of pullback, probably somewhere around like $18. Slightly lower here to the 200 exponential or simple on the weekly. We're seeing some weakness in the momentum oscillator indicators here. Nice run up to the upside, just beautiful run on commodities. I don't think it's crazy that we're getting ready to give back, like 20% or something like that and retest some of the support. But after that, beautiful beginning of just a massive uptrend that could last for literally years or decades. Monthly still looks very strong. Pretty aggressive sell-off, but most of it got bought up, as you would expect on an initial sell-off. Hard sell, very close to we've printing bearish divergence and breaking down from here. All green histograms, blue slope line. First red histogram showed up last month. Seems like we'll probably kind of chop around, bounce here, maybe a little more upside, and then we'll start testing the downside. We have some pretty strong support at like 21, but if we fall out of bed from there, like 18 again looks like some real strong support, and that to me would probably be some very, very good buying opportunities if we're fortunate enough to get back down there. All right, just a couple left here. So copper, same thing. We're really paying attention to copper, Dr. Copper as the canary in the coal mine for a lot of various things. Copper is very important for like emerging markets, electrification, all that stuff. So definitely very important going into the future. Massively bullish on copper. We overshot our initial downside target and didn't quite find support there, but we backtested and got back above it. So we'll see. I think it's likely copper could have a pushback up here to like 24, short to medium term. Pretty aggressive move on the indicator oscillators for not a lot of follow through. But if we do get through this level, I think we should shoot right back up here. Looks like there's definitely some potential. JJC, again, starting to look real bullish here. Coming out of the bearish control zone, hard buy signal. Pretty aggressive, bunch of green histograms, blue slope line. Closed across an 821 back to the upside. Broke above them, back tested them. Closed pretty aggressively here. Seems like we're probably going to get some continuation up to like 20 bucks. So nice little like 25% move here, like short term. But again, we got to really just watch the medium bounce off the 200 exponential and simple. Back test here. There's a lot of air, big air pocket up to like that $20 range though. Only a couple candles of price action on the way up and the way down. I do like how this looks for some potential further move to the upside. Pretty aggressive buying on the monthly right here. Do we want to call that a bottom though? No, I mean it's a bottoming candle, hammer, but you know, I wouldn't say like, oh, that's it, it's the bottom now officially, since some buyers showed up at the end of the month there. Hard sell, aggressively accelerating Stochs to the downside, all red histograms, very close to the 821 crossing down on the monthly. So, I mean, what happened? You know, we had a beautiful, aggressive, awesome move up here from August of 2020. I mean, from 13 to, 20, almost 6, almost a double in very little time. A bunch of distribution happened. It looks clearly in hindsight now like Wyckoff type 2 distribution. And then we broke down from that level. So, probably going to see maybe a little bit of a back test. Maybe that's what we're seeing now, a dead cat bounce off support right here. But, I mean, unless we see like the next monthly candle just shoot up to 20, which, again, could happen. And that's what we're looking at for that potential big move in copper. But even then, that move back up really is just to try to stop the 821 cross. So I think that's my base case. I think my base case for this monthly move up is like a 12 to 15% move up in copper, a back test, and then after that we'll see if it holds, but likely reject it and go lower. So again, we will see, but a lot of these charts just on different time frames looking the same. So on to a couple of member requests here, and then we're going to go ahead and wrap it there. So we have Seed, SEED, Origin, Agritech Limited. So on the monthly, this thing has just been melting down. Very, very bearish longer term from 2007 peak to our recent low in 2020. Had a nice bounce off those levels. Back tested the 236, the 382, made it up to the 0.5, came all the way back down. Violated the 236, which is not good. We don't normally want to see it do more than a 2 fib level retrace or move to the upside. Typically that means things are not necessarily good. But here it did put in a higher low, so that is actually still okay. And then we talked about the potential for closing back above the 8 and 21 on shorter time frames and put our trade setups in play here, saying that we didn't want to take out the recent swing low with a crazy stop loss to the downside and 147% upside. So even with 30% downside risk, you would obviously just take a smaller position. You're not just going to take like a massive position with 30% downside. But 147% upside, it was still like 5-to-1 risk reward ratio. Absolutely crazy. Obviously moved some in our favor already. Still very, very bearish. On the monthly chart, hard buy signal coming out of the bearish control zone, putting in a higher low. So, are you kind of bottom fishing on this one? You definitely are. Is probability in your favor that this plays out? It's definitely not. But if it does, it's going to be very, very rewarding. So we see here, obviously, threatening the 200 exponential and simple on the weekly, back above them on the recent close. We have this real nice potential upside target here for the initial move to the 0.5, and then realistically the target's a 618. Even if after that it just goes back to zero, that is a $37 target. We're at 11 now. That's a couple 100% still on the table there. And I mean this one move since we put the trade setup in play is essentially your stop loss. That 25% upside, and we were talking about a 30% stop loss. So at this point in time, you can just say, F it, I'll just put my stop loss back at break even. Who cares if I get taken out? It was worth a shot. But the upside potential to let it ride with no risk is, that's best case scenario. Free trade. But weekly looks okay. The last couple times it did this, it failed. So we don't want to get excited here. Probably just fails and just, rushes back down to zero. But there's some potential. Again, daily, pretty choppy as well. Trying to go on a move here. Last couple times we confirmed the 200 exponential and simple back bullish. It did have a pretty big rip right here. 300 and something percent. Again, this is definitely trash. And, whatever this is, you don't want to invest in it because it's definitely going to zero. But in the meantime, the potential of the trade setups we talked about looks okay. Looks okay. I mean, once a trade goes 25% in your favor, it's okay for sure. You can't say anything else about that. It's definitely okay. Or better. And then last but not least, MMLP, Martin Midstream Partners, LP. So let's switch out to our longer time frames here and take a look. I don't believe we plotted this one. So on the monthly, very disgusting. Obviously peaked out here back in 2013. And we have our trough in 2020. Dropped from like $40 to $1. Disgusting. Literally was on its way to zero and it stopped just right. It was 92 cents away from zero. And then it was like, you know what? Close enough. We got close enough. We're almost all the way there. You want to go all the way, or should we call it here? So obviously called it here. A nice little move up off here. Still obviously a dead asset. Absolutely horrendous chart. All the way up on that move from the bearish control zone. Hard buy signal. Beautiful, multi 100% move up here. 300% move. Beautiful. But now we're getting the hard sell signal. It's rolling back over. I think we probably get one more little push up here and then print some bearish divergence and it rolls over. Trying to build some momentum. But again, look at how much momentum we spent on the way up. And the last time we were at that level was back here in 2013. And look where the price was. The last time that we were at stochastic at this level was in 2014 at $47. 2013 at $47. So our Stokes are at equal levels to when we were up here, but we're way down here. So we're very close to or have already printed monthly bearish divergence. Absolutely disgusting. Absolutely disgusting. But arguably, has a little momentum in its favor. I wouldn't just fade this thing right this second. The 821 did cross the upside and it held for now. But overall, this probably, I already made it to 90 cents, so it definitely goes to zero. It's just a matter of when. Weekly, we are back testing 200 exponential and simple. 200 exponential has gotten back on top, which typically happens around like when you're bottoming. So obviously we see now in hindsight that the first time, here's a 200 exponential was below, and then they saw like a cross kind of back and forth through this area, like 200 on top, 200 on bottom, 200 on top again, as we kind of like bottomed out here. Back tested the 200 exponential and simple. So like you got to just assume this is in a bear trend. We back tested and it's getting ready to go lower. You have to assume that on the weekly. So definitely some conflicting messages. The daily was able to flip back bullish. I'd be real careful with this one. It looks like the move has probably already played out. You could use the 200 exponential and simple as your support. And if we start closing longer time frames below the daily levels, you just call it. But in the meantime, you ride the momentum. It's not ideal, and the risk reward is probably not going to be good. But there's an argument to be made. You're at a pivot point. Clear, chop through here. Clear, chop through here. At the 200 exponential and simple. So if you're going to just bet on something, bet on it when you can find out if you're wrong or you're right immediately. And that's what pivot points are great for. So if you're going to take just a random entry, not a bad place to take it from. Not a good place to take it from, though. There's been so much move already. But I don't like this one. I don't like it. I would probably just stay away from this, honestly. That's my final conclusion. All right, let's jump back in the chat and see what's going on here. And pretty sure we did it, guys. We made it to the fucking end. Yeah, let's go. All right, so Oh, yeah. So I think we went through all that already. So, yeah, I guess we'll just wrap it up. No new messages. So I appreciate everybody that tuned in today. Everybody took the time to leave a little something in chat, comment, whatever. Obviously, all of the subscribers, group members, community in general, even the silent creepers out there, creeping in the shadows. I love you guys too. One day you'll have to say hello, though, or something else. Don't just unsubscribe because I'm mean to your favorite asset. But that is it for today. So hopefully everybody enjoyed the stream. Big week coming up here. Very exciting. Tons and tons of gains locked in over pretty much the last month has just been absolutely phenomenal as we saw all of our trade setups explode to the upside. Some of them, sort of just kind of bubbled or crept to the upside. But quite a few of them putting in some phenomenal gains in the like 20 to 60% range. Beautiful July. So getting ready to start off August here. So we'll see how that goes. Obviously going to have some amazing opportunities present themselves. So make sure that you stay tuned for that. Make sure that you are always investing in yourself, looking for, high probability trade setups, trading with the trend, nice risk reward trade setups, making sure that, what you get rewarded with is substantially higher than what you have to risk to get that reward. And then of course, making sure that we're being responsible with our position sizing, making sure that we get to make, enough bets that we could be wrong a few in a row. And we're not blowing out our accounts with reckless, all-in type decisions, as many people will say. But that is it for tonight. So it is 10:48 p.m. Eastern Standard Time on July 31st, 2022. And it is our Sunday evening market look ahead. I'm going to go ahead and wrap it up there. Like always, remember, this is not financial advice. I am not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Everybody have a great evening, great week. If you're interested in the exclusive indicators or joining the group for a very modest contribution to support my work, please reach out to me via email at cryptotrendtrader@gmail.com. But that is it for today. Crypto Trend Trader, I am out of here. Everybody have a wonderful week. I'll see you guys in the group. And keep your eyes out for the Wednesday live stream. Our Sunday live stream, this one obviously, both those every week from 8 p.m. to 11 p.m. And then, of course, our Friday live stream as well, which is every single Friday, 11 a.m. Eastern Standard Time, till usually 1 or 2 for our weekly market wrap-up. So everybody have a great night, great week, and, love yourselves, love your family, take care of everything, lock in those gains, make that money, protect your principal, preserve your capital, and peace. I'm out. Crypto Trend Trader.